U.S. economy this year. If we look at where gas prices currently stand, about $3.60 plus per gallon, that poses a drag on consumers of about $100 billion. So we're seeing very significant headwinds starting to buffet the economy, maybe not yet reflected in economic data, but you'll see that becoming more and more prevalent as this quarter and next quarter wear on. As we, we've never been to $5 gasoline in the U.S., and if we get there, then I think that that's going to really be a shocking development for consumers and would be a point of concern. So I don't want to go on the tape saying 150 on oil prices is where we go into recession, but I do think, and I've been modeling this, that as we get into the 150 to 200 type of range, that will really create some strains and heighten recession risk in the economy. The one saving grace, Lisa, final point, is that there's an immense buffer of cash that households have accumulated over the course of the recession. Of course, not evenly distributed. It's more in higher income households, but that is enabling households to, for some time, deal with these very high inflation pressures and energy prices in particular.
It's not just gas, though. It's also aluminum. It's also wheat. It's also corn. It's a lot of the basic staples that people use. How do you factor all of that into your models?
Well, we can, we can see how that, something like aluminum then has, not many households are buying aluminum. So we have to, look further down the supply chain. But we can compare what's happening in producer prices to consumer prices and see the pipeline pressures coming through the system. And what we can see is that, we're getting close to a peak in CPI, but that doesn't mean we have price declines coming. We just have a deceleration of some degree. So going back to second order or second derivative effects coming down the pipeline, and the Fed is taking great confidence that there will be a moderation coming. Now, the oil price spike kind of delays that peak. But in a lot of categories, we can see that it is starting to slow down. And to some effect, as we divert consumer spending into energy spending, into spending at the pump, then that will actually remove some of the inflationary pressures elsewhere in the system once consumers work through their savings buffer, which in the latest income and spending and data, we did see the household savings rate coming down. So that buffer's wearing thin, and you're going to start to see more bifurcation in the inflation numbers, where it's not a rising tide across the board, but rather some hot categories stealing momentum from some other more discretionary categories.
Hey, Carl, great work as always. Good to catch up, buddy. Carl Riccadonna there of Bloomberg. Lisa, just to go through the comments we got out of Europe yesterday, it's important to reset. The German economy minister got all the headlines yesterday morning saying, I wouldn't support an embargo of imports of fossil fuels from Russia. I'd even speak out against it. And those comments came out almost exactly at the same time that we got a kind of readout of the conversation between Putin and Macron from an aide speaking to AFP. There was nothing in what President Putin told us that should reassure us. Putin wanted to seize control of the whole of Ukraine. And you just wonder what gives way here, Lisa. If that materializes, do we have to shift our stance in Europe on energy sanctions?
That's what a lot of people are speculating could come out of today's NATO meetings, just because how much further can you go? As we do see what was very much an escalation by Vladimir Putin, he's clearly not giving up his goal, right? I mean, he said that quite clearly, and clearly the attack on the nuclear power plant seemed to indicate that. So where do you go from here?
There's a split with Democrats, Tom, an obvious one. You heard it from Jen Psaki of the White House yesterday. Our objective and the president's objective has been to maximize impact on Russia, minimize impact to us and our allies and our partners. Speaker Pelosi didn't hide what she thought, ban the oil coming from Russia.
I agree with you. What Pelosi said was really, really important yesterday. There is some polling, John, and Democrats they're not on the same page as the Republicans, but there is a huge consensus to be tough on Mr. Putin in America. There's no question about that.
Tom, I wonder what percentage Russian imports of crude, or rather Russian crude imports for the U.S. would make up of total imports anyway this year.
It's not much.
3% last year.
Really
I wonder what that comes down to anyway.
Really, really, and this is true of everything. Aluminum, everything else out there. It is really much more towards third world type countries. Like the effect of wheat on Egypt is a huge deal. It's much less on America and frankly, many parts of Europe and Great Britain as well.
It's also the self-sanctioning, though. I mean, right? How much is this just because a lot of companies aren't even importing it? It's a lot more expensive because of all of the political risk.
That's exactly what I'm getting at. people are pulling back anyway. I mean, we talked about it all week. It's sanctioned in all but name right at the moment. I mean, for the US, it's a very different calculation and compared to, say, the European Union, that's for sure. Futures down 0.8% from New York. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. Ukrainian President Volodymyr Zelensky is urging Europe to, quote, wake up. He issued a video message this morning after Russian forces occupied the site of the largest nuclear power plant in Europe. That followed an attack that ignited a fire at the complex.
If there's an explosion, that's the end for everyone, the end for Europe, the evacuation of Europe. Only urgent action by Europe can stop the Russian troops. Do not allow the death of Europe from a catastrophe at a nuclear power station.
The head of Ukraine's nuclear operator has said the plant's reactors, which are protected with thick metal and cement shells, are designed to withstand an aircraft crash. The US and allies tighten sanctions on Russia and choke off investor demand for its assets. Part of Wall Street are jumping on the buying opportunity that it's creating. Bloomberg has learned Goldman Sachs and JP Morgan have been purchasing beating down company bonds tied to Russia in recent days. Both banks have declined to comment. The United Arab Emirates is set to be named on a global watchdog so-called grey list. Bloomberg has learned some members of the Paris-based Financial Action Task Force have indicated the Gulf nation has not made enough progress in tackling illicit financial flows. Nations named to the list are subject to more oversight. The organization is meeting today to discuss the UAE government's efforts to combat, quote, dirty money. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
The U.S. has announced it's moving 8,500 more troops to Eastern Europe. If they're not being deployed to Ukraine specifically, why is that so important, and does that risk further provoking Russia?
Well, there's two things going on. So what the United States recently announced is that we are going to put 8,500 troops that are part of the NATO response force on high alert. That means they'll be ready to deploy on a moment's notice should we need those forces anywhere in Europe to protect NATO territory. In addition, the United States is also looking at possible additional moves that they might make to move U.S. force posture into Central and Eastern Europe. The reason we're looking at that is because a lot of the members in that neighborhood in Central and Eastern Europe feel concerned. And so we are looking at what measures we might take in the name of reassurance and deterrence.
Access Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
NATO is a defensive alliance. We do not seek conflict with Russia. But let there be no doubt, our commitment to Article 5 of the Washington Treaty is ironclad. NATO will protect and defend every inch of NATO territory.
Jens Stoltenberg there, the NATO Secretary General from New York City this morning. Good morning. Futures are negative, 0.8% on the S&P. On the Nasdaq, we're down by 0.75%. The Russian stock market still closed. Won't get any trading until at least next Wednesday. Euro dollar, a break of 110, 109 on euro dollar, down by 0.8%. Some real euro weakness out there. And if you compare the losses, Tom, in the US equity market to what's taking place in Europe right now, the equity benchmark in Frankfurt, Germany, the Dax down by more than 3% once again, and the banks hammered.
In the old days, John, we called the DAX the roulette wheel. Let's sit on this for a minute, John. I think it's really, really important. You've got FTSE in London. Some of the other exchanges are there. They're followed, but they're really not germane. But, John, the DAX is what you play in Europe, and the play right now is big losses.
And Deutsche Bank down by 6.6%. I'd go to Italy as well. Look at Unicredit trading lower by 9%. And on the week, some of these names, Tom, have lost about a quarter of their value.
Yeah, I don't want to do a big data check here, folks. Will Kennedy's too important, but I'll tell you, markets are on the move. Massive curve flattening this morning, 27.80 for those that keep score on 210 spread. Will Kennedy keeps score on oil, and he joins us now, leading all of our hydrocarbon coverage. Will, I look at the ruble. John mentions the equity market in Russia is closed. Is Brent crude a good quote? Or is markets reopened? Do we get a different Brent crude price next week?
I think there are several things in play there, Tom. Market traders are going to be looking at two things. Firstly, does this buyer's strike that we've seen with Russian crude continue? The thing that's been driving Brent higher is that many people, for a variety of reasons, have been refusing to buy Russian crude, and that's led to idea that the market is short. But the second thing they're going to be watching over the weekend are these talks in Vienna, which looks like they may be reaching a conclusion. There's some optimism out there that we may get a deal that releases more crude. So as we go into the weekend, that's the balance that we're striking. But it's worth saying that the volatility is just off the charts. Overnight, when we had the attack on the Ukrainian power station, we went back to almost 120 before coming back all the way down to where we are now, 112.
Well, we had a boat sunk by mine or by attack. Reuters says maybe by mine. No one really knows. An Estonian boat, I believe, in Odessa yesterday. For the Russians, is the Black Sea delivery critical for them to move oil out to bring in revenue?
Absolutely. The port of Novorossiysk in the northeast Black Sea is one of the major outlets for Urals crude, their main export grade to the west. They need that to keep going, and it's important that ships can get to that port. And one of the problems that we've had over the last week is that a lot of tanker owners are unwilling to take their ships there because they believe it's dangerous, because they're scared of sanctions, because the insurance is too expensive, or because they just don't want to do business with Russia. And it's very important to Russia that the Black Sea remains navigable.
Well, just talk us through the logistics and the time here. Let's say you send a tanker to pick up some of this crude. You pick it up, You leave the Black Sea. What happens if the sanctions come through? Is that what they're grappling with, that they get stuck with this Russian crude they can't do anything with?
Yeah, absolutely. And the other problem is you get to, oil's not sanctioned, but you get to Russia, you've got to pay port agents, you've got to do business. A lot of tanker owners, which may not have the biggest compliance departments in the world, are grappling with all these issues and trying to work them out. Now, there is a perception that some of these issues will get worked out, that we may see some easing next week as some ship owners decide to go in, as some traders get more comfortable with doing business. But it has to be said, we haven't seen many signs of that yet. And you'll have noticed that Urals was offered at a record discount yesterday, suggesting that still nobody really wants to touch a lot of this oil.
Yes, offered at a record discount and with no bidders, just to get to emphasize your point that a lot of people don't want it. How focused are the commodity traders that you speak with on oil versus wheat versus the grains as we see prices surge there?
I'm not sure it's a competition. I think there's plenty of attention for both, to be honest with you. I do think that for all the attention on oil, food could end up being the bigger story here. Wheat is trading limit up every day in Chicago. We're on the verge of setting an all-time high. It was really noticeable yesterday that China was in the market, as we were reporting, buying extra cargoes of wheat, extra cargo of soy. We know that their policymakers have said we're concerned about commodity supply. I think there's a lot of concern for all the attention on energy that this Ukraine war is going to cause a food crisis as well.
Will, I want to pick up on that point about China's involvement and sort of trying to front load and stockpile ahead of any possible disruption, since they're one of the biggest importers from Ukraine. How much more action is there on that front? Potentially Egypt trying to stockpile, other countries as well.
Yeah, I mean, there's a real scramble. In terms of Russian-Ukrainian wheat, it is a real problem in the Middle East because, as you know, Egypt is the single biggest buyer of wheat in the world, and they normally fulfill their tenders through Russia because it's the closest big exporter of wheat. It's going to be a big problem for them if Ukrainian wheat, which is all closed off, and now Russian wheat is hard to buy. And for the Chinese, they're just going to load up on what they can get from North America in terms of wheat and South America in terms of soy. The other issue that we're looking at today is the fact that the Ukrainian farmers are not going to plant this spring. So this is just a crisis that's going to get worse. It's not just the ability to export from Ukrainian ports. It's the ability of Ukrainian farmers to grow wheat, one of the world's most fertile regions during a time of war.
Well, that's the exact conversation we had with the Deputy Governor of the Central Bank in Ukraine. That's a massive problem. Will Kennedy, thank you, sir. Tom, you've got to get out into the fields in spring. It's going to be a huge issue.
Yeah, I agree, and this is something that really has not been studied yet, John. John, Rachel from Mammoth Lakes emails in. Thank you, Rachel, for watching this morning. John, this is a really serious question to you. We're going to start paying the gasoline prices you have been paying for your whole life. The 76, John, there's a gas company in the West called 76.
Thanks for that,
In
Tom.
Mammoth Lake Ski Run, it's $5.69 a regular gallon right now, just a vanilla gallon of gas. That's almost English-like. John, what is it like to spend that much for a gallon? What does that do to your life?
Well, you get used to it, Tom, for one. You complain about it, for two, because in the UK we've paid higher taxes on fuel than you have here in the United States, Tom. So sure, it hurts. And you have to remember, Tom, that fuel demand, food demand, in general, largely inelastic, right? The demand.
I agree.
What you
totally.
will do is spend less on other things. That's why in some ways, Tom, I think this could be a bigger demand problem than perhaps an inflation story.
In strongest terms, I agree, and Alan Ruskin alluded to this before, is we really don't know the inflationary impulse of time because you don't get normal substitution here. I mean, John, if I'm drinking Tang and the price of Tang goes up, I can switch to, Crush or, something else, orangey. That's an easy substitution. You don't do that with a gallon of gas
Futures
in a war.
down by 0.75% I just hope you stop drinking Tang, Tom. The Nasdaq down by 6 or 7 tenths of 1%. Yields come in 7 basis points. Crude's higher, just short of 110 on WTI, up by 2 percentage points. The coverage on Ukraine continues from New York City on TV and radio. This is Bloomberg.
of the year, but Bali is still quiet and empty. I am here in Kuta Legian, one of the main walking streets here that is used to be a tourist spot for beach, dining, shopping, but many shops here are still closed. Most of the outlets are either for rent or for sale as they have run out of business.
Saya kerjanya di sini udah lama, udah ada 10 tahunan di sini kerja. Masih sepi sih, nggak kayak dulu. Kalau dulu kan rame, sekarang ya ada 1-2 itu ada, tapi nggak kayak dulu. Kalau dulu rame sekali. Sekarang paling dapat jualan ya 100, 120 gitu. 200 ya. Kalau dulu sih ya nyampe dah 1 juta, 1,5 tuh nyampe dapat jualan. Bisa sampai 2 juta dulu. Sekarang nggak pernah lagi dapat segitu. Sama aja. Belum ada turis ke Bali. Masih ya domestik aja.
While Bali has reopened its borders for foreign tourists since October, they're still not coming in. Many international airlines are yet to reinstate their direct flight to the island. Balinese people here really hope they can see more people from Australia, China, and Europe to come visit next year.
As a company grows, there are more challenges. What do you worry about the most?
The market opportunity for us is enormous, and so our challenge is to continue innovating, driving, and pushing ourselves every single day to go after the most attractive profit pools in this incredible global beauty and wellness market.
This is, in many ways, the second Cold War.
We are coming out of a pandemic, and now we are going into another shock.
Worst case scenario, oil continues to rise and we hit 150. You're going to get an inverted curve.
The Fed is in a very tough place here.
Go too fast, they risk stagflation. Go too slow, and 7.5 and rising inflation can become entrenched.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
It is Payrolls Friday. It does not feel like it. From New York City this morning, good morning, good morning. This is Bloomberg Surveillance Live on TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Ferro. Futures down by 0.75%. Big things can happen, Tom, in the fog of war.
In the fog of war, we had the panic last night. John, I think panic's the right word. We don't usually like to do that on surveillance, but can we agree, John, 7:30 last night? Panic.
I think a lot of people at the time, Tom, were scared. This morning, we worked through the headlines, less reason to be. And I'm going to work through the headlines now, Tom, because if people are just engaging with the content this morning,
I agree with that.
They read as follows. So what happened last night, overnight, there was some fighting between Ukrainian and Russian forces on the site of a nuclear plant. A fire broke out. That fire, though, Tom, broke out at a training complex at the plant. The fire, as we understand, has been contained. The IAEA informed us this morning, no change in radiation levels. We learned that it has not affected essential equipment either. That's all good news. We also understand, Tom, Russian forces are now in control of the site.
They're in control of the site, moving north from Crimea. This is nicely down the major river from Kyiv. But I'll tell you, John, what we've seen here is a real adjustment, and part of it's a Friday adjustment. This is not about the jobs report. It's about trying to figure out flows and balance sheets into the weekend. And John, just one statistic to see the euro print, a 109 handle, weaker euro is extraordinary about the tensions that are there right now.
A break of 110 on euro dollar, and Lisa, just working through the banks in Europe, down really hard. SocGen, Deutsche Bank, the usual names. Raiffeisen in Vienna, Austria, just down by what, 25%? on the week so far?
It's been tremendous. And frankly, we did avoid a worst case scenario, at least according to the reporting so far. However, the attack on the nuclear facility, while it didn't lead to any kind of explosion and does seem to be stabilized, is an escalation that has raised the specter of additional sanctions on oil or other harder moves, which I think is what is pervading the market this morning and some of the risk-off feel.
How many times have we sat down with AP Moller-Maersk, Tom? These headlines coming through from the company. Just every single morning at the moment, you sit down, you go through the headlines, it's company after company after company. Here's another one, Maersk, suspending new air bookings this time for Russia and Ukraine, suspending new Asia-Europe intercontinental rail bookings as well, suspending new bookings for Belarus. It exempts food and medicine from that Belarus suspension. So, Tom, they're the latest headlines where we've seen company after company. Some of this is a moral obligation, and Tom, some of this is just business operations. You can't conduct business as usual with the war taking place where it is.
Mr. Putin saying, what, an hour ago in some comment that he has no evil intent to his neighbors. Well, the reality is we're in a war, week 2 of a war, John. And what I would note is the span that we're seeing. Yesterday we saw IKEA make some statements, and this morning Maersk, which is critically important for logistics, and also the luxury provider Hermes shutting down their Russia store. I mean, from Maersk to Hermes, 2 different worlds, but there's the same outcome.
You'd agree, though, Tom, there is a difference between a moral obligation, believing you have one to step away from Russia, and just business operations. And we saw with the car companies, the auto manufacturers,
Volkswagen,
they can't get the parts out of Ukraine. That's very different to saying we can make the cars, the operation is okay, we just won't sell you the cars anymore.
That's going to fold into GDP, into the ECB and what they do here. But what I would say, John, again, what's so unusual about this Friday, forget the jobs day, is the balance sheet adjustments that are being guesstimated. And again, this without the Russian markets open.
And how to price the European banks as well.
Exactly.
In all of this. Futures then, they shape up as follows. We're down 0.8% on the S&P. On the Nasdaq, we're down by 0.75%. Tom talked about that break of 110. There it is for you, 109.82 on euro dollar, negative 0.75%. And there's the move higher on crude. Lisa, just short of 110, 109.78, up 2%.
We're talking about a lot of things. We're not talking about the jobs report. It is payrolls Friday, probably the least important payrolls Friday that we've had in a very long time at 8:30 a.m. We will get a read on what happened in February. The expectation is for a deceleration in job creation, 423,000, although we've got a number of different estimates on that front. Average hourly earnings expecting to also rise. How much does that offset the increase that we're seeing in commodities? 1:15 p.m., this very much front and center after a series of meetings that Antony Blinken is having, Secretary of State of the United States, with a number of NATO leaders. He will come out, he will talk to members of the press. How much do we hear about additional sanctions after talking about sanctioning the oligarchs? And that really has been the target. Yesterday, additional oligarchs targeted, with Tony Blinken saying that their support has facilitated Putin's war of choice against Ukraine. How much further can they go? And our eyes really are on overnight and into tomorrow. China begins their annual National People's Congress, talking about the economic goals, expecting a growth projection, a growth target between 5 and 5.5%, which is the first time since 1991 that goal is below 6%. John, do we hear something from them about the situation from Russia and Ukraine, given the fact that there has been a remarkable and notable silence?
Lisa, thank you. Team coverage on this situation starts right now with Bloomberg's Maria Tadeo in Brussels, Emily Wilkins down in Washington, D.C. Maria, what we saw take place last night was stunning. A firefight around the site of Europe's largest nuclear power plant. What's the reaction from the Europeans been this morning?
Yeah, and as you said, we have to be very careful around the reporting of this. What we do know, of course, is that the International Atomic Energy Agency has said that this was in fact shelled by Russian weapons, but the reactors have not been affected. There is no nuclear radiation or leakage coming out of this. But of course, there are 2 people injured here. The big question for NATO ministers and foreign ministers gathering here in Brussels is who controls this site and what are they intending on doing? And what I get from the people that have been speaking with the entire morning is that they do worry that Vladimir Putin, on the one hand, is saying, I have no intention of hurting Ukrainians, but of course, on the ground, it's a very different picture. And everything that we've seen so far from the language, but also the military actions from Russia are escalating. They also worry that Russia is trying to form or force a conversation about nuclear. Vladimir Putin talked about nuclear deterrence yesterday. His foreign minister repeated that. And today, of course, we have those terrible pictures that really shocked a lot of Europeans this morning. One official told me this is now playing with fire, and this is now serious on that front. So we have to be very careful. But NATO today also concerned about escalating in any way.
Maria, what is the trajectory of this war? It's a completely unfair question, but I'm going to go with it. What is the trajectory of the war this weekend? There's a nuclear plant. There's another one to the west-northwest, X number of miles, and beyond that, there's another one way northwest, and then another one past that. What's the trajectory of the war, the land grab, this weekend?
Well, it's get to the capital and take control of the entire country. And as you say, we're seeing this from pretty much every point around Ukraine. Ukraine is completely trapped from pretty much every angle. We see that the Russians have not been able to take over the big cities, but that is the next big plan. And of course, Vladimir Putin saying we have an operation that's, quote, going according to plan, repeating, it is my conviction that Ukrainians and Russians are the same people, and we continue on a mission. Remember, Tom, in Russia, the word war is not allowed. It is banned. You have to talk about a special operation to free up Ukraine from Nazis. And just very quickly also, Tom, there is a cultural aspect to this. The word Nazi in Russia is very politically charged. It is a very terrible insult when you use this. It goes back to the history of the Second World War. It goes back to the great Stalin victory. When you use this word, it really dehumanizes the other person. To say you're a Nazi, it just means you're a terrible person. And of course, the government of Russia, in Vladimir Putin's eyes, is on a mission to get rid of this. Of course, we know the reality on the ground, again, as I said, is very different. And the Ukrainians did vote in an election for Zelensky to be the president, who is now, by the way, an icon in the country.
Meanwhile, Emily, President Biden has said everything is on the table, including sanctions on oil. And I'm wondering how much we know about reporting that Biden is encouraging domestic producers to actually pump more so that they can provide a buffer if we should go further in terms of the sanction front.
Well, there's absolutely pressure on President Biden to go further. I mean, you heard Speaker Nancy Pelosi during her presser yesterday when she was asked about it. She did not mince words. She said, I'm all for it, ban it. And then we saw that bipartisan effort coming forward with actual legislation to have a ban. And then besides Biden's own party, he is under pressure from oil executives who say you need to move up the production of shale, that the U.S. does need to work on becoming more energy independent right now. They know it's not going to happen overnight, but there needs to be a plan in place. At this point, we haven't seen the White House budge too much on this issue. They've said that they're worried that any sort of ban can wind up hurting the economy, hurt Americans at the pump. I mean, gas prices are a major consideration for President Biden. It's something that's very much on his mind and the mind of all Democrats as they try to make sure they're holding on to Congress in the upcoming midterms. But at the same point, I mean, we've seen this war continue on. We've seen the pressure continue. Clearly, there's a lot of bipartisan support for Ukraine. We're going to be seeing another funding request come through, $10 billion for humanitarian aid and military aid to Ukraine. We're expecting that to be considered next week as Congress prepares to fund the government, to give the White House that amount of money as well. There's a lot of support for this, and I think the pressure is just going to continue on Biden to do something about banning the U.S. purchase of Russian oil.
Emily, thank you. That pressure's building. Emily Wilkins in Washington, Maria Tadeo in Brussels today. Tom, for most people, last night was an escalation, a step up of risk. How do NATO members respond? That's where things start to get difficult. If you believe in what the French president was said to believe after that call with the Russian president yesterday, that things are going to get worse before they get better, what's the next move from European allies? What does it look like?
The next move for me, and we're not NATO members, John, but within the politics of this, I'd listen to experienced military authorities as we have with General Hodges and General Kimmett. Both of them were grim, which means you have to apply material to the threat. That's what I would look for next. NATO supplying Ukraine in a huge way.
So that's a strategic military decision, Tom. Are sanctions part of the next move too? And what's the step up in sanctions look like?
What does Europe do on terms of hydrocarbons? Aren't we back to square one?
We are, Tom, in a big way. Tom Keane, Lisa Bravitz and Jonathan Ferro. Futures down about 1% on the S&P. Yields in 7 basis points. We're lower to 176.83 and crude at 110 at more than 2%. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. U.S. Secretary of State Antony Blinken is praising the speed, unity and determination the NATO alliance showed as it came together after Russia's invasion of Ukraine. Blinken spoke to reporters ahead of a meeting of NATO's foreign affairs ministers in Brussels today.
As the Secretary General said, ours is a defensive alliance. We seek no conflict, but if conflict comes to us, we're ready for it. And we will defend every inch of NATO territory.
Blinken will travel in the next few days to countries that border Russia or Ukraine, including Poland, Moldova, Lithuania, Latvia, and Estonia. Around the U.S. and around the world, cities are stepping up to show their support for the people of Ukraine. City halls have been bathed in blue and gold of the Ukrainian flag. Grocery store chains and state-owned liquor stores from Alabama to Idaho have pulled Russian products from their shelves. Several governors have proposed divesting pension funds of Russian-controlled assets and banning state agencies from doing business with Russian state-owned firms. And JP Morgan is warning that Russia's economy could be headed for a major collapse. The bank's analysts say the increasing disruptions to the country's exports, Russia could see a situation comparable to the fallout from the country's default back in 1998. JP Morgan is predicting a peak-to-trough crash in Russian gross domestic product at about 11%. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
The Omicron variant and the latest wave have an impact on not only consumer trends, but your business. And do you expect the booster shots to make a difference?
Yeah, booster shot will make a huge difference. I think it's been accelerated by the huge leadership of the current Prime Minister Kishida. And I'm hopeful that our business will come back in Japan around perhaps mid-February to end of February, because we expect that peak time will come around that time. And then the government will shift toward the reinvigoration of consumer. That will help us. And we had seen the huge comeback of the business in December when the things were toward the normalization. So I believe the business will come back, and I'm very much hopeful.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
Crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
Just getting pictures, Tom, of what appears to be Secretary Blinken alongside NATO members in a family photo in Brussels, Belgium. That's Jens Stoltenberg alongside Secretary Blinken. I believe alongside Secretary Blinken, Liz Truss, the Foreign Minister in the UK, Tom.
All of us have witnessed this so many times. And John, this is really emotional 2 weeks into this war. Mr. Putin has no evil intent against these people. That was his quote this morning. And yet, can you imagine what they've talked about? Can you imagine the scenarios and outcomes they've been briefed on by their military authorities?
Well, the gentleman right in the center, alongside Secretary Blinken, Jens Stoltenberg, the NATO Secretary General, his words this morning, Tom, it just demonstrates the recklessness of this war and the importance of ending it. How they choose to respond to this today, Tom, I've got no idea, but certainly in the fog of war, bad things can happen, and that's what a lot of people were concerned about overnight as that firefighting was taking place on the site of Europe's largest nuclear power plant.
We will continue with coverage on this, folks, and of course we've got reporters in Poland, in Brussels, and other parts of this European continent. And the G7 meetings this morning, it is Jobs Day. John, Lisa, and I really don't care. We'll give you the coverage of it. There'll be important information. But far more than that is the thermometers that we have worldwide in equities, bonds, currencies, commodities. Priya Misra at TD Securities is excellent expert at looking at full faith and credit and sovereign dynamics. Priya, what does your world say this morning about where our balance sheets and where our financial system is heading?
So the rates market, the fixed income market, is extremely concerned about what's happening. I mean, clearly there's uncertainty. Political risk, I would say, is always hard to price in. You've got binary outcomes. We're also worried about credit losses. You know, how much of this is going to spill over into balance sheets, as you talk about, for banks, for corporates. And so I think the treasury market's reacting in a classic flight to quality, safe haven type move. But I think, you know, the Fed is setting up here to hike as well. So, I think the market pricing in this policy mistake, there's also this concern that the Fed is concerned about inflation. We're living through another stagflationary shock. And is that going to make the Fed overdo it? So that's why I think we see the market pricing in cuts a year from now, which I think is really this policy mistake of the Fed. That's also
dovetail your work with Mark McCormick. He's been wonderful on strong dollar, resilient dollar, and the events have shown him to be very correct. We have Euro Swissy at a precipice. We have 2-10 spreads screaming a vector to recession. Link those two worlds together.
So I think what the market's worried about is that the Fed has to respond to inflation. And, you know, as much as they want to be humble and nimble, if inflation's that high, they don't have tolerance for inflation being that high. Do they raise rates? That's going to tighten financial conditions. Plus, we're living through the war also tightens financial conditions. Strong dollar tightens financial conditions. And the impact of financial conditions on the economy is what is very hard to measure. So what the market's saying is that the Fed may overdo it. But I would actually caution the market a bit on that. I think we're absolutely going to get a few hikes. But can the Fed pause once they get rates to 1%, 1.5%? We're actually arguing that the Fed is going to pause at that point and reassess and really see if the economy is responding to financial conditions. And they might be tolerant of higher inflation as long as it's sort of decelerating. And you know, you talk about this jobs report not being that important, which it's not for today. Absolutely agree. But I would watch participation. If that starts to rise, you know, that's some sign that labor supply is picking up, and that's going to bring some downward pressure on wage inflation. So it might allow the Fed to be a little bit more nimble in terms of pausing and preventing this policy mistake that the market's starting to price in.
Priya, this is very similar to what Eddie Ardeni was arguing yesterday, that it's actually not as terrible as people think for equities, perhaps other things, but because the Fed is not going to necessarily commit a policy error by raising too quickly, we will all have to tolerate a much higher level of inflation for a longer period of time. What does that mean for the long end?
So it means that real rates, which would probably rise, we do have them rising from here, probably not as much as what we saw in the last cycle. I think it also means inflation expectations are a little bit higher. So I think the long end, when you're talking about, I think you're talking about the 10-year or the 30-year, can it rise as break-evens or inflation expectations stay high, which I think they will? So I think real rates might be lower, but I do think nominal rates are likely to rise from here. But are we getting to 3%, 4% on the 10-year? I don't think so, because I think there's going to be a self-limiting aspect to how much the Fed can tighten, because there's a lot of other tightening that's happening from other areas.
And Priya, to that point, taking a step back, the reason why we're not focused on the jobs report is because we're focused on that stagflationary shock that you mentioned earlier. How much has this environment gotten away from the Fed? They have missed their window to make an impact on this market, and that it's really going to be dictated by how much the price of oil is, by how much the price of wheat is, aluminum, and other commodities.
So I do think, there's the stagflation shock that you talk about in food and energy. But I think what the Fed's focused on is service inflation, which tends to be more trending. And I think that's really what's going to drive how much of tolerance they have. If that service inflation metric starts to taper off, I think then the Fed can be a little bit more tolerant, because we've seen energy price increases, food price increases in the past. The Fed has looked through it, because ultimately it does start to hurt the consumer. And so I would watch that service inflation, wage inflation. That's where I'm a little worried. If that doesn't decelerate, the Fed may have no choice but to continue to tighten, because then it works through the economy. It's going to slow aggregate demand. But I would watch that service number, really.
Priya, thank you. Priya Misra of TD Securities. The focus obviously on what's taking place in Ukraine right now. But next week, CPI is going to be a reminder stateside that the Fed's got a job to do. 7.5% was the previous read. I'm going through the new estimates. Natixis, Tom, coming at 7.8 for next week. Scott Brown at Raymond James looking for 7.8. Morgan Stanley looking for 8. Thomas Kosberg, a friend of this program, looking for 8.1. Michael Gapin at Barclays looking for 7.9. These are big numbers, Tom.
They're up there, and what the big numbers are as you move out. Again, I'm going to go to, I believe it's the May 4 meeting. I'm sorry, John, I haven't memorized it yet, but I'm going to go out to the May 4 meeting where this was going to be transitory, or it was going to ebb away in June, July, August. Says who?
Got a median estimate then, Lisa, of 7.9. Now, you tell me, if we get an 8 print, an 8 handle, does 150 make sense on a 2-year?
Well,
149?
But you said a really important point earlier, which is when you start to get a shock from commodity prices, that actually eats into discretionary spending. That's disinflationary. So if you have that kind of backdrop, does the 8 handle even matter if you're looking at a scenario that's moving so quickly? And I think that a lot of people are grappling with that right now, which is the reason why yields are where they are.
It'll be hard to ignore it on March 16th, that's for sure. They'll want to ignore it. I'm sure they would love to, Tom.
I'm sure too.
They can't ignore it anymore.
I'm looking at the Bloomberg Financial Conditions Index, folks, which is legit math. Good morning, Michael Rosenberg and his team. And John, I'm sorry, it shows a tightening Lisa's talking about.
Payrolls an hour away, 423,000, the median estimate. The previous read, 467. Our attention is not on that. It's on the war in Ukraine. From New York City, for our audience worldwide, on TV and radio, this is Bloomberg Surveillance with futures down 1% on the S&P, yields lower by 6 basis points to 177, and crude through 110, up 2.5%, and euro dollar south of 110 at 109. Negative 0.9%, a weaker euro. This is Bloomberg.
this chip shortage is going to last longer than many people believe, likely straight through this year. And I wonder what that means for prices. Will this get worse before it gets better?
I don't know that it will get worse before it gets better, but there's no reason to believe it's going to get meaningfully better anytime soon. The Commerce Department put that data out yesterday, and what it showed is that there's a real shortage. Demand is 20% higher than it was a couple of years ago. There's a huge mismatch in supply and demand. Prices are high. Prices are higher. So what has to happen is we need to make more chips. Unfortunately, there's no easy solution. The solution is increased domestic manufacturing of chips, which is what we need to do.
Any minute now, a news conference with the NATO Secretary General Jens Stoltenberg. Look out for the headlines from that. We'll bring them to you. Going into it, futures are negative by more than 1% on the S&P. The Nasdaq down by 1.1%. Into Friday, the S&P 500 down about 0.5% through Thursday. Just 0.5%. On the equity benchmark in Frankfurt, Germany, the Dax approaching losses of 10%. Responsible for some of that, these guys, the European banks. The European banks more broadly, beyond Germany, Deutsche Bank right now, on the week, Deutsche Bank down and down hard by 22%. Raiffeisen out of Vienna, Austria, Tom, that's lost 27.5% of its market cap this week alone. It's not just about direct exposure to Russia, it's also about the ECB not delivering those rate hikes that people were looking for.
Quick compare and contrast. The Dax drawdown from the peak is about 19%. The drawdowns that we see in America are way, way less, as John has mentioned today. You've got SPX, you've got the Dow, they're down 8-9%. NASDAQ 100 is down about 16%, John.
The European name's getting absolutely hammered. And Lisa, the Federal Reserve seemingly going one way, and the ECB was going to come along for the ride, maybe, get a late trip at the end of this year. Now the doubts start to get baked into the movement in the banks.
Yeah, not only the banks, but also the currency, which is part of the reason why you're seeing the euro fall out of bed. But how does this bleed into banks that are now facing both an economy that's really uncertain, as well as rates that remain deeply negative for a long time?
Euro dollar, a break of 110, Lisa, to the downside, 109. Euro dollar 109, the dollar the strongest since the summer of 2020, and a treasury market that shapes up as follows. Switch up the board and get to 2s, 10s and 30s and think about this. Later, in about an hour from now, the expectation is payrolls north of 400K. Week later, I believe Thursday, on the 10th, we get CPI. Could have an 8 handle. Does it make sense, Tom, to have 2s down south of 150 with those kind of data points, if indeed that's the data we get? And that's the challenge for the treasury market right now.
The challenge is none of this is in the textbooks. We'll talk to Julia Coronado, Dr. Coronado, about this in a moment. But John, this was original territory, and with this war, it is truly original central bank territory.
Anybody talking about payrolls, Tom, this Friday?
We are.
I mean, what do we spent like 2% of the program on payrolls.
You know, we're going to go to Jeff Rosenberg and, you know, our usual good Governor Costner, Professor Krosner, rather. Professor Rosner will be with us. And wait, no, he's with Morgan Stanley.
Oh my God,
I'm sorry.
Tom, really?
I think he's
trying to make fun of you.
I think he's throwing shade at me.
Yeah, that's clearly
that would be shade.
Thanks for that, Tom. Thanks for that. We're not focused on payrolls.
We're not.
And for good reason. That's your cross-asset price action. Let's get you some single names and say good morning to Romain. Good morning, Romain.
Yeah, the market still focused, obviously, on the situation in Ukraine. Yesterday on the close, we focused a lot on the breakdown in supply chains, a breakdown, of course, that is much more worse than what we saw prior to the war here. Keep an eye on the automakers. We are starting to get some some commentary about just how global the auto industry is. You had some of the smaller EV makers like Rivian and Lucid talk about not being able to potentially meet production targets this year. Rivian said the only way it could do it is if it raised prices significantly. That created a little bit of a backlash. Those stocks have really gotten whipsawed, and now you're seeing that trickle into some of the bigger players here. Tesla shares down 1.5% here in the pre-market. General Motors also lower, as is Stellantis. Stellantis down about 7% as it has a little bit more exposure to some of the European and Asian markets here. But the real issue right now here isn't just about whether you can get your hands on chips. It's really about the steel, the aluminum, and a lot of the other components that go into those cars. Now, a big concern here is that we could be in short supply of that should this war continue on. Flip up the board. Travel stocks remain on the back foot all week long here. Carnival Corp down 4%. They've had to divert at least 24 cruises away from Russian ports, and they've said they're trying to make contingency plans for other ports in that area. American Airlines down about 2%. Keep in mind, American Airlines, like most U.S. airlines, don't actually hedge their fuel. As of December 31st, American Airlines, United, JetBlue had no fuel hedges to speak of. Of course, jet fuel prices up 40% this year, 20% since Russia invaded Ukraine a couple of weeks ago. And Citigroup and the bank stocks, they may not be as bad of what's going over in Europe, John, but they are on the back foot this week. Citigroup right now setting up for its worst weekly decline since June of last year.
Rowan Bostic, an important close this Friday afternoon. Look for that at 4 p.m.-ish hour. We've got huge movement here. I really want to emphasize Standard & Poor's 500 breaks down nowhere near the 8 p.m. lows that we saw last evening, but nevertheless, futures at negative 47. The VIX out 34.45 shows the immediate tension. There will be an immediate tension at the Eccles building where they will say, as FDR said in 1930, try something. Julia Coronado joins us now, outstanding at Macro Policy Perspectives on our theory. Dr. Coronado, the pressure is on. If somebody at the Fed says to Chairman Powell, try something, as FDR said, what exactly does he try?
Well, I think right now he tries to remain calm. So as Jonathan highlighted, the Fed is faced with some very difficult trade-offs. You've got an incredibly uncertain escalating situation in Europe that could end up dragging in the U.S. In a more direct fashion. It's already complicating supply chains at a time of high inflation. So the Fed was planning a series of rate hikes, quantitative tightening. I think for now you keep that baseline steady. And then you watch the events unfold, and as he did before Congress, you emphasize that they're going to proceed with care, with caution. This is a fundamentally different kind of supply chain disruption than the one that was driven by surging demand. This is driven by geopolitical breakdown. And that's something that, you know, the energy prices that consumers are about to get hit with, again, that's going to move a lot faster than any wages possibly can. So the resiliency of the U.S. consumer will be tested. Right. As the jobs report is likely to show this morning, we're coming in strong. So, you know, there's a pretty significant cushion of momentum to absorb this shock. But the data are going to have to tell the story, and the Fed's going to have to just be extremely careful here.
Julia, from economic history and moving over to the accounting statements of the world, there's a massive divide between New World theory, which is about the immediate, the income statement, the flows, and a more old world look about just look at the balance sheet. I think of the Swiss as iconic at that. Do we have a central bank that's about ready to be very balance sheet centric, be worried about liquidity, be worried about the quality and the valuation of global assets?
Yeah, I mean, definitely that is an input into these decisions. You know, one of the things that gave people great confidence in 2022, despite fiscal tightening, was balance sheets, right? Strong balance sheets. We heard the Fed say it over and over again. But, you know, if these assets start getting revalued very quickly and balance sheets look shakier, and again, it's not just the level of the prices, but the uncertainty. So the volatility we're seeing is something that gives people pause, that affects business hiring and investment decisions, that affects consumer spending decisions. So Again, calibrating this is going to be careful, but the market is going to be one of the key leading indicators. How much do financial conditions tighten is going to be something that Chair Powell looks very carefully and closely at.
Yeah, it's definitely a delicate time. It's also a delicate time with a labor market that even Jay Powell said shows signs of overheating. Julia, how much do you subscribe to this theory that's being put out there quite a bit, that this stagflationary shock, the high commodity prices, will actually push more people into the labor market, will actually increase the participation rate as people realize that they have to fund themselves more aggressively in the months to come?
Well, Lisa, we were already seeing that. So with the benchmark for January in hand, if you look at prime age labor force participation, it has been on a very nice upward trend for a year now, more than a year now. So we are seeing people come back to the labor force. And there's every reason to expect that, again, as the fiscal support fades, and yes, as inflation rises and other things, we are also seeing, the things that held people back out of the labor force getting better. The Omicron wave is behind us. We should start seeing better child care operations and availability and all of the things that we expected to see. So yes, I do expect rising labor force participation to be something, it'll be a key theme in labor markets this year. And I think all the leading indicators are there and it's already underway.
Julia, as always, thanks for being with us on Payrolls Friday. Julia Coronado there of Macro Policy Perspectives. Lisa, we were hoping at the end of this year, the back half at some point as the year grows older, these supply chain issues get better. Now we've got something else in the mix, which complicates things once again.
Absolutely. How do you factor this into a world that is changing so dramatically? This has been a shock. I mean, one thing that I've noted, and I think we can't say enough, is how much this is a game changer for so many people in terms of understanding the trajectory of economic growth. If this resolves quickly, okay, then perhaps we can go back to some of the conversations we were having before. This is a new dynamic, though.
I keep mentioning this, Tom. We've got a real lack of visibility on the outlook now, right? Given what's happened in the last couple of weeks. The Fed has got to put together some forecasts next week and put out the summary of economic projections, the dot plot, growth, inflation, unemployment, all of the above.
Their cover is to wait for the inflation report. You went through the migration up here to 7.8% and even above, but their cover on let's wait is for that inflation report on the 10th, 11th. What I would say is what we're seeing in terms of visibility, John, is what you see with a Bloomberg terminal or 100 years ago in any given war, the Napoleonic War, just as an example. You look at the markets. Here's a fact, John. Right now, I'm looking at a screen with deterioration, ruble just printing a 115 again.
We're pricing a problem in Europe. I want to be clear about that, and I don't think that's inflammatory, Tom. Euro-dollar's just broke 110, 109. Unicredit's down 9.5% in Italy in a single day. Yeah. Some of these banks in the last 5 days have lost a quarter of their value. Deutsche Bank right now, Lisa, down 7.4%.
You can understand why. It's not just rates that are going to remain low for longer. It's also an economic uncertainty. And frankly, every analyst we speak to says it is more like stagflation in Europe than it is in the U.S.
And John, I remember you and I having lunch at Brasserie Lipp in Zurich the day that the Swiss intervened in 2015.
Euro Swissy,
could
Tom.
Be today again.
Are we at parity yet on
We're
Euro
on
Swissy?
The edge of cusp of parity.
Right there now, aren't we?
Yeah.
Not far off it. Yep. Euro dollar near session lows 109.57. That currency pair down, let's call it 1% from New York. This is Bloomberg.
Keeping you up to date with news from around the world. With the first word, I'm Ritika Gupta. As the US and allies tighten sanctions on Russia and choke off investor demand for its assets, parts of Wall Street are jumping on the buying opportunity that it's creating. Bloomberg has learned Goldman Sachs and JP Morgan have been purchasing beaten down company bonds tied to Russia in recent days. Both banks have declined to comment. The United Arab Emirates is set to be named on a global watchdog so-called grey list. Bloomberg has learned some of the members of the Paris-based Financial Action Task Force have indicated the Gulf nation has not made enough progress in tackling illicit financial flows. Nations named to the list are subject to more oversight. The organization is meeting today to discuss the UAE government's efforts to combat quote, dirty money. And Singapore is revamping its system for granting visas to some of its highest paid foreign workers. The new points-based plan will include scores for how the applicant's nationality contributes to the diversity of their firm, in addition to education, skills, and pay. It's amongst the biggest visa changes ever for a nation that relies heavily on overseas labor. Global News 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
What do you think is the impact of the Prime Minister on the market?
As Mr. Suzuki, who is the Financial Services Minister, he mentioned at his own press conference, and share buybacks is widely used to return profits to shareholders and improve ROE. And how to share out the profits from growth is, totally the decision of the management of each company after carefully taking, all the stakeholders into consideration. And I believe Mr. Kishida has a quite cautious stance on the uniform regulation of share buybacks. And I think because he is giving a consideration to each company's, individual circumstance and, decisions.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
How difficult was it to go to investors and say, invest, give money, put money into a travel tech company within this environment?
It wasn't that difficult because TravelPerk is doing much, much better than the rest of the industry. In fact, we are at the moment growing at 4 times revenue of pre-COVID numbers.
Well, it's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Russia attacks on civil nuclear facilities in Ukraine. This is a crime. This is just a crime, nuclear terrorism, and I call on international reaction. First of all, Atomic Energy Agency should react to what is happening there.
Some really powerful, very strong words coming from the president of Lithuania. From New York City, good morning. Futures down 0.8% on the S&P, on the Nasdaq down by 0.7%. In Europe, how many times have we said this week? Down and down hard. The DAX off by 3%. The CAC 40 in Paris, France, off by 3.4%. The bank's getting hammered over there. Tom, euro dollar a break of 110. Do you want to talk about commodities quickly?
I want to talk about what you just said from the gentleman from the Baltic states. John, Mr. Putin out earlier saying they will use water to get to Kaliningrad. And I'm sorry, this is a huge deal. It's a sub-story to Ukraine, but the Baltics are fragile this weekend.
And commodities are responding to a lot of this, Tom. Yeah. Paris wheat, a record 400 euros a ton. The weekly rally, almost 40%. Almost 40% a week, a single week.
It's the one chart, folks, back 20 years where I can say it's a moonshot. I mean, there's just no question about it. Let's keep things going here. Kriti Gupta on the same theme this morning with a chart. Kriti, what do you have?
Yeah, well, let's just talk about the impact that you're seeing in terms of Russian assets in particular. So for my chart of the day, I bring you something very simple, and those are going to be those dollar bonds for a lot of the state-owned giants and those commodity companies that are extremely exposed. And here's why this is so significant, folks. We're looking at Gazprom, Evraz, a British steel company, very exposed to Russia and Ukraine and the Russian rail. Over the last 2 years, on TV, you'll say, why am I looking at this chart? On radio, it is a horizontal line for 2 straight years and then a steep vertical drop, simply seeing that those bonds are now trading for as low as 35 cents on the dollar. This is so significant because essentially the move that you're seeing minimizes all the trading activity you've seen in the last 2 years, and it's something they're seeing in the stock market as well.
And Kriti, as you just sat down, we've gone 115 to 118, weaker ruble, which will fold into that chart. On radio, it's simple, horizontal and then down. There's a few of those out there this morning. Right now, Henrietta Trace joins us on Washington. And Henrietta, I've got to go to the gentle lady, for me, always and forever, from Baltimore, not San Francisco, and that is Nancy Pelosi. She sounded like a Republican yesterday. How close is Nancy Pelosi to powering the House to a stricter tone against Mr. Putin?
Well, I think that there is an option for votes in the House and even in the Senate for a sense of the Senate or a sense of the House, a resolution saying, you know, we don't want to import oil from Russia anymore, want to get on record. It's the same parallel as I saw from the sanctions debate about a month ago when everybody was coming out gung-ho. But the reality on the ground is that the private sector is self-sanctioning. So the crude trading and the petroleum products trading at a discount in Russia are not being purchased, whether people don't think they can get it across the Black Sea, they're concerned about secondary knock-on sanctions, or they want to just promote domestic production. I think that Speaker Pelosi is basically getting free money here, free political play, just as every other member is, by saying, you know, let's really get aggressive on Putin, let's hit him where it hurts, let's ban imports of oil. And the White House is saying, you know, we don't need to, you know, nobody's buying it anyway. So I think the Speaker is doing what politicians like to do best, which is get a lot of really good talking points out, but I don't anticipate more than just a resolution saying, hey, you know, we support being extra tough on Putin.
Henrietta, we don't need to because nobody's buying it anyway. Do you get the feeling they want people to buy Russian crude, though? Isn't that the goal of carving out energy? Don't they actually want people to buy Russian crude?
It's interesting, and you definitely get questions. I get questions from staff about, you know, what do we think from China? Is China going to purchase? And that would at least get it out into the system, but you don't see that either. And of course, we know that their pipelines are at capacity. They've already purchased Russian crude at discounts in the past and the last quarter. So I do get the sense that there is a focus on not disrupting domestic gas prices. That's paramount. And conveniently for the White House, they're the only ones that are stressing that more than anything right now, while everybody else is saying ban oil imports. So I think it's an interesting dynamic that the Biden administration continues to keep open because they want to make sure that Russia and the EU nations know that all sanctions options are on the table. I think the EU is being marching very much in lockstep with the United States on that. So I think this is a lot of politics and a lot of trade, which inherently is political. And I think the White House is getting some really good talking points here.
Well, but just to build on what John was just saying, right, is President Biden keeping the door truly open at this point, or has the plot shifted already to oil and gas sanctions that almost are inevitable at this point?
Well, I think what we should consider is the facts on the ground. The White House under the Biden administration has approved something like 9,000 leases, which is more than the first year of the Trump administration. We increased domestic production by 4.5% or so last year. We have a backlog. If you speak with energy experts, which I love to spend time with, I even married one, but you want to focus on the E&P companies and what they are keeping shut in and are they producing. For the last 2 years during the pandemic, shareholders have been telling them to return value to shareholders, give us dividends, give us buybacks. There's a lot of backlog that I think we can get out of the U.S. if we wanted it. And the reality is that we have been getting it for the last year, and imports from Russia are down.
Henrietta, allow me to jump in because Jens Stoltenberg, the NATO Secretary General, is just speaking at the moment. He said in his first line, basically, the coming days in Ukraine are likely to be worse. Do you have a good understanding, Henrietta, as he speaks, what's the next step up in sanctions would be? If we were to assume this gets worse, can we assume what the next sanction step will be?
I think one of the things that the United States and NATO nations have done is cast a really wide net across the financial sector, and that's had the consequence of tamping down everything, every sector. What I understand might come next is more targeted sanctions at individual sectors. I don't know whether it would be aerospace or insurance companies or shipping companies or certain sorts of production, certain commodities, but I think a more specific realm of sanctions. I don't know whether that'll be as coordinated with NATO allies. As you know, the way sanctions work, all 27 nations get to pick and choose how precisely they put on those sanctions. So I don't know if it'll be a conjoined process, but I do think something more specific coming through beyond just oligarchs, although that will continue as well, is something that we're likely to see. I had been very optimistic that we would see oil and gas sanctions, but I think it's more going to be sort of that resolution I mentioned, a sense of the Senate kind of prospect. And instead shift to individual sectors as we try to target Russia more holistically, more specifically.
Henrietta, thank you. As always, from Vader Partners, joining us on sanctions happening right now. Jens Stoltenberg of the NATO Secretary General speaking as follows. Tom, calling on Putin to withdraw forces immediately will do what it takes to protect NATO territory. The NATO Secretary General Jens Stoltenberg there.
And no doubt with huge follow-on today, Secretary Blinken attended those G7 meetings and the NATO meetings, rather, and then G7. Diplomacy at work. The markets signal the tone and then color of that diplomacy, John, and I want to be very careful here. Dollar ruble and indeed euro ruble, another way to measure, is almost out to new record weakness. This has all happened literally in the last 30 minutes. John, we're going to print a 119 dollar ruble in a matter of a heartbeat here, and that's extraordinary.
We're a whisker away. The line from Stoltenberg repeatedly, NATO is not seeking a war with Russia. On sanctions, a conversation you do not want to miss with Wally Adeyemo. The US Deputy Treasury Secretary will do that next on this program, looking at a market with dollar ruble approaching 119, euro dollar south of 110, crude north of 111 now, 111.39.
Nuestro estudio, nuestro experimento, no hemos pintado todos los edificios de blanco, sino estos más asequibles de pintar. Y ya hemos detectado reducciones medias en el área metropolitana de 0,8 grados aproximadamente en un periodo de ola de calor y con picos máximos de 4 grados de disminución en un momento puntual del día, en una zona puntual del día. Y como dices, en una ciudad como Barcelona funciona incluso mejor que las zonas verdes. Según las modificaciones, nos detectan incrementos, o sea, disminuciones de temperaturas mayores con tejados blancos que con incrementos de zonas verdes como tienen planteados el plan director urbanístico.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
This is a market that, over the past few weeks, has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
But we need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Everything that's going on in Europe is even more inflationary than what was in place before.
The central banks are now in an impossible position.
For now, we are still looking for positive momentum in the U.S. economy.
It's going to be a very tricky situation of just navigating and beating inflation from a Fed standpoint.
As the Fed looks to contain inflation, and it's really important that the jobs recovery continues.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene on radio and television. It is a jobs day, but it is not. The markets are on the move off information on the war in Ukraine. And, John, right now, all eyes on Brussels.
Yeah, a warning from Jens Stoltenberg as well, the NATO Secretary General, just speaking moments ago, Tom. This line, saying Georgia and Bosnia may be at risk, calling on Putin to withdraw forces from Ukraine immediately, and stating something he stated repeatedly, Tom, that NATO is not seeking a war with Russia.
And what is so important here, and this goes to the Baltic states, is sometimes, folks, the way the headlines lay out in the Bloomberg speaks volumes. Stoltenberg, NATO strengthens info sharing with Sweden and Finland, and then there's the Georgia-Bosnia headline right behind it. Remarkable.
So let's work with Georgia first, Tom, and think about the Black Sea, and you're perfectly positioned to go through this for us. They seem to be closing in on Odessa, which is in the southern part, the southern port of Ukraine. This is in the north of the Black Sea. Georgia, as you know, Tom, to the southeast of the Black Sea. What's Russia trying to achieve now, if that's what NATO Secretary General Jens Stoltenberg thinks is at risk?
For the Russian people, this is the history of Mr. Putin in 1, 2, and 3 wars. Some may be off the radar for Americans, but the huge battles of Georgia, this is between the Black Sea and the Caspian Sea, were a huge deal for the Russians as bodies and injured came home. It's deeply emotional if he chooses to revisit Georgia, and again, certainly, as we know all, to revisit Bosnia.
That news conference happening with Stoltenberg at the moment, this time after some stunning pictures overnight. And the good news, as far as we're concerned, around the fighting around the nuclear power plant in Ukraine, the fire was contained, point 1. Point 2, we've learned it has not affected essential equipment. Point 3, no change in the radiation levels. And that fire, Tom, taking place, fortunately, at a training complex on the site.
The panic subsides, but there's other news flow today. John, let's get through the data here quickly with our esteemed guests from the administration. And I would just suggest Brent crude moving a bit higher and ruble up to 118 moments ago.
Let's start with equities. Futures are lower by 0.8% on the S&P. Over in Europe, we're down by more than 3% on the Dax. In Paris, France, it's brutal for the banks. Euro dollar a break of 110, 109. Euro weakness for a fifth straight session, and crude breaking out. That move sticks. 111 on WTI, up by more than 3%, Tom. Big move.
Very good. Our conversation of the day on this term, sanctions. Right now in Ukraine, there is a teacher and a nurse, and they are leaving Ukraine, and maybe they've got an 18-month-old with them. It was not war in Nigeria, but Wally Adiamo came to California as an 18-month-old with his parents. He's done better than good out of Yale Law, terrific in the Democratic Party with different public service positions, and the Deputy Treasury Secretary joins us this morning. What will happen on sanctions, sir, this weekend?
What I can say, good morning, thanks for having me, is that if President Putin continues to escalate his war in Ukraine, we will continue to increase the sanctions that we've put on Russia. It's important to see what's happening in the Russian economy today. Because of the sanctions we've put on, inflation is likely north of 20%. Russian markets have been shut down for days, and just earlier they announced they're going to shut them down for more days, which is the longest shutdown they've had since at least 1998 when they defaulted on their debt. And in addition to that, any investor or market participant that I've talked to over the last week, what they're trying to do is take their money out of Russia, which means that the Russian economy is collapsing.
You've had experience with that with Mr. Fink at BlackRock, so you've served both spheres of government and finance. From where you sit, can the Biden administration act unilaterally, or we wait for our allies?
The thing that the president has discovered is that we are far more powerful working with our allies, and that's exactly what we've seen here, building an alliance that doesn't only include our European partners, but also partners and allies in Asia, which has cut off Russia from access to the international financial system and the global economy.
Mr. Secretary, your words just moments ago, if Russia increases the war in Ukraine, we increase the sanctions in Russia. Mr. Secretary, was last night an escalation?
So I'll leave that to the judgment as we look at what happened last night, but our goal is to make sure that we continue to increase sanctions as they increase their escalation. We took sanctions actions yesterday. We're prepared to take additional actions to not only cut off the Russian economy, but cut off Russian elites who are helping support President Putin, and we're going to continue to do that as long as President Putin chooses to continue his war of choice in Ukraine.
You'll leave it for another department to decide whether that was an escalation. Then you have to enforce the sanctions that the White House decides. So, Mr. Secretary, just help us understand how the sausage is made. Do you do the groundwork ahead of sanctions being announced, or do you have to do the groundwork after they've been announced? Can you help me understand what order it comes through? Do you have to do a load of studies now to be prepared to execute on something that might be announced down on the road, or do you wait for it to be announced?
So in November, when we started to see Russian troops gathering outside of Ukraine, the president ordered Secretary Yellen to start planning for the imposition of sanctions if Russia were to invade. He gave one order, which was to make sure that anything we did had a maximum impact on Russia and mitigated the impact on the United States and on our allies. And that's exactly what we've done, working closely with Europe and our allies in Asia to make sure we design sanctions that we could use if Russia invaded. And we have a number of things that we've already deployed, but a number of things that we've planned for over the course of the last few months that we're ready to deploy if Russia continues its invasion of Ukraine.
Let's talk about the stuff you've planned for and haven't deployed. Have you got a plan for energy sanctions if you needed to deploy it? Has that plan been made at Treasury?
So going back to what the president gave us as an order, make sure that we maximize the pain on Russia and limit the cost to the American people and our allies. What we decided to do with regard to energy is make sure that we do nothing to increase the price of energy immediately. So we've created a general license saying that energy can be sold through pipelines, by boat, immediately. But what we're doing is that over the long term, we're degrading Russia's energy production capabilities so they can pump less energy from the ground in order to cut off their source of revenue over time.
So I understand what's been announced. I'm trying to understand whether you have a plan to deploy if you need to announce energy sanctions. Speaker Pelosi says ban the oil, ban Russian oil. I want to understand whether you've done the work at Treasury to execute that plan if it needs to be executed. Does that plan exist at Treasury?
So the plan that we have now is to do everything we can to make sure the market remains well supplied now. What we have plans to do is to grade their ability to produce energy into the future, because the thing that we know is that if we do something immediately that increases the cost of energy, that'll be a cost on the American people, and it'll be money that goes into the pocket of President Putin if the cost of energy increases around the world. So instead of increasing costs now, our goal is to make sure that we degrade their ability to produce oil over time, which will further starve them of the resources they need to conduct the kind of wars they are doing today in Ukraine.
Mr. Secretary, does that mean that the sanctions that we've put out there so far are all of the sanctions that we can put out there at this time? Because what you're talking about will take time. So even if there's an escalation, there cannot be the sanctions on oil without having a conflict with this goal.
No, that's not true. We have other sanctions options outside of the immediate sanctions on the energy industry. We have sanctions on the financial industry that we can continue to deploy, sanctions on their defense industry we can continue to deploy. We have a number of options that we can do that will allow us to meet the president's objective, which is maximizing the cost on Russia and reducing the cost on the United States and on Europe. Our goal is to make sure that the energy market remains well supplied, because that's important to the American people. But by making sure that energy prices stay low, it starves President Putin of the resources he needs to continue to fight the war in Ukraine and also to destabilize the region.
Mr. Secretary, how important is it to then get more production domestically, to encourage the domestic oil and shale producers to actually increase output, to create a buffer, to give you more tools?
What I can say is that the most important thing we can do is make sure that the market today is well supplied. And we're doing that in the United States, but we're also doing that with our allies and partners.
Mr. Secretary, forgive me. Let's go back to the question. Are you reaching out to domestic suppliers of crude in America? Have you spoken to them? Devon Energy said to us this week that the CEO was mystified that you hadn't reached out to boost production at home. Have you done that? Have you spoken to domestic suppliers?
So as you know well, the domestic supply of crude right now is at a peak, and that it'll take time for more supply to come online. We're focused on making sure that the energy markets are well supplied today, because we want to make sure costs are reduced for American people today, and we're depriving President Putin of the resources he needs to fight the war today. Over time, we need to do more to make sure that the energy market is well supplied, and we're also focused on that as well.
You said we're at a peak. We're at 11.6 million barrels of oil a day. Back at the start of 2020, north of 13. Just looking at that off the Bloomberg terminal. What do you mean we're at a peak?
My point is that at the moment we are producing a great deal of energy in this country. It'll take time for additional energy to come online, but what we want to make sure is that as that energy comes online, we're well supplied today, because we want to make sure that Americans who are going to the pump today are paying the lowest possible cost. That's going to require not just us to take action here in the United States, but other producers also to make sure that the energy market's well supplied.
You're a great student of history on this, Mr. Secretary, and is this a sea change for the politics and the energy politics of the Democratic Party? Does Joe Biden have to lead the Democrats to a new energy theory, a new energy philosophy?
I don't think it is. I think that ultimately we've always been for a well-supplied energy market. We know that in the immediate term that's going to require us to rely on fossil fuels. But what we should learn from this is that ultimately being reliant on fossil fuels that often come from places like Russia is not in anyone's interest. That's why the president is focused on making sure that we move to a clean energy future that's not only good for our security, but is good for our planet over time.
Mr. Secretary, I'm a little bit confused, as many people are right now. Crude's at 111 on the Bloomberg right now, 110.90. We've got domestic oil suppliers, private companies essentially saying, we just want to hear from the White House. We're surprised we haven't heard from the White House. They haven't heard from you. They haven't heard from the White House. It doesn't make sense. And you keep repeating the same thing over and over again. We need to make sure there's enough crude supply, yet you won't reach out to domestic suppliers. We need to tighten the grip on Russia. The fact of the matter is people are stepping back from Russian crude anyway. And as you know, and I'm just going to repeat this for our audience, not for you, sir, 3% of crude imports last year for the United States came from Russia, just 3%. So people are already stepping back from Russian crude. What is it you think will happen if the United States comes out and announces that they're no longer importing Russian crude? What is it that you think will happen? And if you don't want to do that, are you essentially suggesting that you want domestic refiners to be buying Russian crude? Is that the goal of these sanctions still? That you want domestic refiners to be buying Russian crude still? Is that the message you want to send to the American public today?
So I know that you've repeated twice now that we haven't reached out to domestic producers, but as you know well, domestic producers are making decisions based on what they see in the market, their ability to make money in the market. And our goal is to make sure that we have a well-supplied market. The president's been very clear about what our goal is. It's to make sure that with regard to sanctions, that we have a maximum impact on Russia and we minimize the impact on the United States and our allies. That's why he's taken steps like working with our allies and partners to reduce the energy supplies that we have in store, and we're going to continue to take steps to try and reduce costs for the American people.
Mr. Secretary, thanks for your time today, sir. Wally Adeyemo, the U.S. Deputy Treasury Secretary. It's a tough time for governments worldwide to try and calculate what to do next as the situation in Ukraine overnight, for many governments, escalates and that war intensifies. Crude, 111.25. It's called an energy carve-out. What energy carve-out? This is Bloomberg.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
Companies now, they're getting hundreds, maybe even thousands of applications. So software has come in to automate the process.
You want to write your resume for robots, not for humans. The only job your resume has is to be comprehensible to the software that is reading it, because that software or robot is going to decide whether or not a human ever gets their eyes on it.
These things are programmed by a certain segment of the population that might not be totally inclusive or not be fully aware.
Concerns about how this technology could exacerbate discrimination. For the FTC, I think foremost, the FTC needs to be making sure that we're fully understanding this technology.
We don't trust companies to self-regulate when it comes to pollution. We don't trust them to self-regulate when it comes to workplace comp. Why on earth would we trust them to self-regulate AI?
capital markets can really help the shift to sustainable and decarbonized global economy. What are you noticing in that as ESG is now the buzzword literally everywhere?
It is definitely the topic of conversation in most meetings I have with company CEOs, with investors, with industry groups. It's amazing.
Stocked early enough all these precious materials you were just mentioning, and we were on the lucky side that our prognosis was spot on in a way, forecasting what kind of material we would need and what quantity we would need.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
I would be recommending and supporting a 0.25% interest rate increase at our March meeting. If we don't see inflation behaving as we expect it to behave, which is to peak and begin to come down, if we see inflation behaving in ways not consistent with that, then we're prepared to raise by more than that amount in a meeting or meetings.
Chairman Powell on the path ahead. Payrolls Friday. It is Payrolls Friday. The number about 12 minutes away. Futures are down 0.9% on the S&P. The Nasdaq 100 down 0.8%. Yields are lower by 5 basis points. 178.70 on 10s. And crude, Tom. Do we need to get used to this, TK? Crude 111. 111.
John, you mentioned a 113, 111, whatever, to the deputy secretary there, and it's still a shock to hear that. That's where we are, John, after 20 days of this. All of these numbers on the Bloomberg are a shock.
It seems to me, Tom, the effort to try and insulate the energy market. I mean, are these unintended consequences of all of this? I mean, you're at a point now where you've got to try and answer the question, haven't you?
I think it's
if you don't want to stop buying Russian crude, are you saying you want refiners here in America to be buying Russian crude?
I'm going to go British on you, John, and go OBE. My guess is politicians will be overcome by events.
Sure.
And that's what we're going to see here in the coming days. Mr. Stoltenberg, with important headlines out of NATO, we'll bring that up to date. We will attempt now to move to the American labor economy. That is difficult to do in this historic week, this war. And it is good to try to begin a jobs report study with Randall Krosner. He is professor of economics at Chicago's Booth School and, of course, a former Fed governor. And he is out doing what Randy Krosner does, which is promoting Booth School. He joins us today from the Red Sea in Jeddah, Saudi Arabia. Professor Krosner, let me stay on jobs here for a moment. We are job forming. We are fully employed, and yet there's so much political pressure on people like you who are saying we're not fully employed. The Fed needs a more labor and social mandate. Let's begin with the basics. Are we fully employed?
Unemployment rate is around 4%. That's close to our 50-year lows. That seems like a pretty full employment notion. There's some technical definitions of exactly what full employment is, but I think by most people's standards, the labor market's pretty strong.
I look, Randy, at where inflation is buttressed up here and maybe a more extended inflation due to this war. Fold in inflation in wages, which Chairman Powell must consider in a number of days.
Yeah, this is the trickiest part because obviously, as you've been talking about, commodity prices have just been exploding. They were going up significantly before what's happened in the Ukraine. Now they're going up even more challenges and potential for chip shortages and other supply chain disruptions. So we're going to see price rises continuing for quite some time and probably quite significantly. So the Fed has to worry about that because people are asking to get paid more. Reasonably enough, everything's costing a lot more. And if that gets baked in and they just expect to get high wage increases, that's really difficult for the Fed to peel back. And that's why I think it's very important that Jay Powell said that despite all of the uncertainties, they're extremely likely to move at the next meeting, and I think they need to move at the next meeting.
Randy, the Harvard professor Jason Furman just put out on Twitter, my prediction for the February jobs number, 150 million. It highlights how at this point, nobody really cares what the number says, just simply because events have moved on. How does the Fed come up with a projection? How do they take these numbers that are incredibly backward looking at a moment that seems so fraught with geopolitical risk and look forward to some sort of projections? Do they even try?
I hope Jason said 150,000 rather than 150 million.
No, he said 150 million. That was the joke. It was basically, he was saying, throw out a big number there. Basically, that's that. Yes, carry on.
Yeah. No, and we've talked about this before because you've been very generous to have me on many Jobs Fridays, that it's not about the particulars of the number. Because sometimes the print is low, and that's not because the job market's weak. It's because it's so strong. People are just not accepting the jobs that firms are making offers to them to. And that gets back to Tom's point about the strength of the labor market. So I think it's not about the number itself. I think the Fed is going to be looking at the what's happening to wage inflation. I think they're going to be looking at the number of hours worked, and they're going to be looking at the employment population or labor force participation ratios. The headline number, that's not the key thing. They know the labor market's really tight.
Randy, at this point, do you think the bigger risk is the Fed moving too quickly or the Fed moving too slowly?
That's always, is it too hot or too cold? And the Fed needs to be moving. Time will tell whether they've waited too long to act. And so I think the deliberative approach that Jay Powell is taking is quite reasonable, that they're going to move despite the uncertainties. And I think that's really important. They signal that they're concerned enough about inflation that despite all the uncertainties surrounding what's happening in the Ukraine, that they are moving.
Professor Krosner, McChesney, Martin, and Truman, and critically in Vietnam, McChesney, Martin, and Johnson, is Fed independence at risk given war?
I don't think at this point that it is at risk. I think certainly if the Fed doesn't act well and to rein in inflation, or it acts to bring the economy into a sharp recession, that's going to raise questions in politicians' minds about whether the Fed is doing the right thing and making the right decisions given the governance structure that they have. But I think at this point it's not any more under threat than it always is, because politicians always have some sort of gripe with the Fed.
Randy, they always will. Randy Krosner there at the University of Chicago Booth School. Thank you, sir. We're down about 9/10 on the S&P. Payrolls Friday. Payrolls 6 minutes away. Let's get to Mike McKee for a quick look ahead. Morning, Mike.
Good morning, John. Well, basically, Wall Street is taking the view that this is an NFP day, not following payrolls, because there's so much else going on in the world. As long as we get numbers that are sort of in line with what's forecast, this will be a very quickly dismissed report, because we already know what the Fed is going to be doing next week. They're going to raise rates 25 basis points, whether or not this number changes significantly. And 421,000 is the forecast with a 3.9% unemployment rate. That tells you that the labor market is still healthy. We get anything like that, and not something for the Fed to be worried about.
Looking forward to your coverage, Mike, in about 5 minutes' time. Not following payrolls. NFP, TK, an important headline dropped just moments ago from Jens Stoltenberg, the NATO Secretary General. I don't want it to pass, Tom, because there are calls to do the following, and he's pushing back. NATO will not move into Ukraine's airspace. Tom, in a minute, the significance of that line this morning.
Now, it's very important, and it redefines geography here in landmass, and it's something I think we're going to really focus on through the weekend, is what does Mr. Putin and his troops actually do? Wolfgang Munchau joining Bloomberg, I believe, early this morning, and he just puts out a blistering note, John, along the line of your questioning to Mr. Adameo of the Biden administration. Wolfgang Munchau minces no words. Ban and end energy imports now. It is a ruthless note that only Munchau can write.
That was the call from Speaker Pelosi yesterday as well. Ban it, ban the oil coming from Russia. The White House so far not looking to do so. Futures down 0.8% on the S&P. On the Nasdaq, we're down about 0.8% as well. Treasuries rallying, down 5 basis points on 10s. Crude through 111. Your estimate on payrolls, 423K. The payrolls report 4 minutes away.
know that it's highly transmissible. We know that 2 doses of vaccines, Pfizer vaccines specifically, neutralize the virus, but not as efficiently, because various studies showing that reduction up to 40-fold, meaning that a 3rd dose is a must for it to successfully neutralize the variant. What we don't know is still that what are the effects of mix and matching between vaccines, and what are the capabilities of antibodies produced from this mix and matching in neutralizing Omicron. Because as we know, many parts of the world use different types of vaccines. And that would be a great data to look at. It will be also great to look at, because majority of the studies done uses a small sample number, and most of the time when you translate it to real world, the data changes. So it will be really good to look at large-scale data of the ability of antibodies from vaccines to neutralize this variant. Grateful here today that the virus, Omicron variant, still uses ACE2 receptor as its main entry. It means that all of the vaccines which are designed with spike in mind still works. Imagine if it uses a different receptor other than ACE2. None of the vaccines would work today. So I think that is the best news that we got from all these studies which came recently, the past couple of days.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
The payrolls report in America, seconds away, with futures down 0.8% on the S&P, on the Nasdaq down 0.7%. Yields lower by 5 basis points on 10s to 179, and crude 111.98. With your payrolls report, here's Mike McKee.
All right, John, it looks like 678,000 jobs were restored in the month of February, significantly higher than the 421,000 that had been anticipated. The unemployment rate falls more than forecast, down to 3.8%, puts us back where we were in December before the changes, the updates, shall we say, to the household survey that were done last month by BLS that pushed it up to 4%. So we have a very tight labor market. It is pretty clear here. Average hourly earnings were flat on the month, however, and on the year are up by 5.1%, which is a very unusual thing. We're going to have to look into that because there were 21 states that raised the minimum wage, and also in January is when we all get raises. So, well, some of us. So at this point, we should have seen an increase. That would have been the expectation. The markets thought we'd get a 0.5% jump in average hourly earnings. I suppose that is good news for the Fed in the sense that it is telling us we're not seeing a wage price spiral at this point. Labor force participation rate does tick up to 62.3 from 62.2. That is also good news for the Fed. They've been wondering where everybody is, and if indeed Omicron's been keeping people home, then they're starting to get them back on into the labor force and looking for jobs. Right now, it looks like the people who got jobs, for the most part, were in the leisure and hospitality space. I'll get you some numbers on that in a moment. But leisure and hospitality, professional business.
I knew you weren't going to let that go, John. Really?
Well, I mean, he slipped it in, didn't he? Futures, they rebound a bit. We're down 0.6 on the S&P, on the Nasdaq we're down 0.5%. Yields look like this on 10s, 177.86. We're down 6 basis points. The 2-year still negative 4 basis points on the session. Tom, let's play a game. And I know you can't really play it, but let's just strip out.
So
If you could strip out what is happening in Europe right now, would twos be at 150?
No,
inflation set to be close to 8% next week, ahead of a Fed decision a week after.
I look at revisions, John, and I believe the math is 770,000 with the revisions. It's a very constructive report. And Mike McKee, I mean, with your work on G7, you were in Prague for that important G7 meeting. Your work in Russia, Moscow, and all of this. Why am I looking at your jobs report and I'm watching ruble and euro on the screen?
Well,
I mean, that's how strange this is.
I suspect the folks at the Fed are watching those headlines
What else do you see there before we move on?
Well, leisure and hospitality was one of the big gainers, 179,000 jobs created in the overall category. You look at food services and drinking places, 123,000, almost 124,000. So people are coming back to work in those areas. There was some concern that people would not want to be waiters and waitresses and bartenders again because of the contact with people, but it does look like they're starting to draw them back in, and a lot of the minimum wage increases may have helped in that area. Government, we saw a big decline last month in government hiring, but it looks like we're back up again. Overall, 24,000 in the education spaces, 15,000 in local government education.
Yeah.
So those jobs starting to come back a little bit.
Mike, just real quick here. Some people might look at this report and say, more people are coming into the labor force. That's good. It's going to decelerate the wage gains. Is that good? Is this potentially a problem at a time when wages have really lagged behind consumer price inflation?
Well, I wouldn't characterize it as good or bad. We went through a very long period where wage growth was in the 2 to 3% range. So if we get above 3%, that's kind of average what economists would be looking for over a longer period. If we're running at 5 or 6%, then there is a concern about inflation out there. So if it moderates a little bit, good news. If it moderates a whole lot, if it stops going up like it did last month, then that's something that is going to be more disappointing. The whole way you put together what you're looking at people are making these days has been so distorted by the pandemic and the government aid and which jobs were coming back that it's going to be a while before we get a real handle on whether workers are better off in the long run.
Big week next week. Mike McKee, thank you so much. And of course, next week, an inflation report onto an important Federal Reserve meeting. We spoke in the hour to the Deputy Secretary of Treasury about sanctions. He, of course, assisted President Obama and President Biden with financial service. He's also had a tour of duty at BlackRock with Lawrence Fink. And it's good now, John, to go to BlackRock to speak to someone away from sanctions, maybe about what yield tells us.
Just a brilliant lineup today, Tom. Jeff Rosenberg of BlackRock joins us right now. Jeff, have you ever seen a number as big as 678,000 met with a collective shrug in the market?
Well, it's a reminder, Jonathan, that the market's focus is really not on payrolls. But if we do just look at some of the implications of the payroll report, clearly a very strong report across the board. Mike McKee, if you're looking, I mean, check out the work week. That may have been behind that kind of disappointing month-over-month AHE. I can't quite see it here. But this is really a difficult period for markets because, as we heard earlier this week, the Fed is focused on inflation and its need to get on with normalization and raise rates while the market is focused on the implications of the Russian invasion. And that implication is a negative supply shock, negative to growth, positive to inflation. It puts the Fed in a difficult position. Right. More importantly, it puts us as investors in a difficult position that we can't really look to interest rates falling from Fed policy easing in the face of any kind of growth slowdown because of the inflationary aspect. So it's a very tricky environment. Obviously, market reaction is about Russia, Ukraine, not really about the payroll report.
We say good morning to Larry Fink, who I know is watching and hanging on every word, Mr. Rosenberg. I don't want you to give away the palace secrets, but does BlackRock have any sense in full faith and credit and in the credit markets of all of this war that you can mark to market this Friday?
Well, you know what we're seeing in the credit markets, and this is kind of even preceding some of the acceleration around the geopolitical uncertainties is we're well off the tight levels and the tightest levels of spreads. Partly a lot of that was just repricing to a higher interest rate environment. I think now you have a difficult time disentangling the price signals because there's a liquidity a premium, risk premium being built into the market. And I think most of the price response so far is that. But we have to recognize that the negative supply shock and the stagflationary impact of that is really a tricky environment for credit. But the growth side is ultimately a bit more on the negative side, and you've seen some wider spreads across credit markets, and I think that's a message that makes sense in terms of pricing in some higher probabilities around some more negative scenarios for how this all plays out. And so that higher risk premium, not yet really talking about default risk premium, but risk premium around the potential to change some of the probabilities around economic outcomes around
Jeff,
this event.
A lot of people who we spoke to this week said that they did rethink, or they are rethinking actively, their allocations in response to the developments between Ukraine with the Russian invasion. Have you done the same?
Yeah. There is certainly kind of the initial playbook of geopolitical risk is very hard for markets to sustainably reflect in prices. I think that initial kind of hopeful response in terms of this could be a buying opportunity has really been replaced, particularly after the weekend sanctions, with a much harder reality that this could be going on for a much longer period with a much more persistent impact to energy prices and broader commodity prices. And that's the negative supply shock that you're seeing now roll out in terms of forecast revisions. Forecast revisions so far are modest, but they're significant in terms of reduction in growth, increase in inflation, a longer period of inflation, and then again to the challenge that puts to global central banks in terms of how do they manage the cross currents between growth and inflation. A lot more focus in the U.S. here on inflation. I think for the ECB, we're going to see perhaps a different response given the central impact this has and a much larger impact on the European growth outlook. So we're really upending a lot of assumptions. But I think clearly here the shock to commodities, the negative supply shock, prolonging the inflationary environment is going to make this a little bit more durable in terms of market impact and economic impact as a geopolitical shock.
And Tommy, you watched this move in euro dollar.
Yeah.
Just about holding on to 109.
Yeah.
What a breakdown.
I can't convey enough, and of course this is something Mr. Rosenberg is so good at, is the cross correlations. And this is not John flightiness. It's sort of a rolling wave, tape to tape, of stress. Euro Swissy not showing me euro US dollar, but nevertheless extraordinary. Ruble at 117, John.
5 days of weakness for this euro. Just to go through the banks in Europe, UniCredit still down by more than 10%, Commerzbank down by 8%, SocGen down by 7%, Deutsche Bank down by a little more than 7%. Jeff, can you frame just how much of a problem we're facing in European markets and whether you'd go near it?
Well, the problem is certainly centered there. You have, significant commodity shock, significant growth shock, and the dependency that we know in terms of the Russian energy supplies is centered obviously much more in Europe than in the rest of the world. So, this is, not only the growth impact, but the stock impact that you just described in terms of the financial linkages for the banking sector. All being reflected in this repricing here of Russian sovereign and credit risk premiums. So your second part of the question, I think it's a very difficult environment to assess the primary and secondary spillover effects. And so a more cautious stance is one that we're taking when we look at some of the impacts in our portfolios.
Hey, Jeff, looking forward to catching up with Rick a little bit later. I'll be catching up with Rick Reeder in the next hour. Anastasia Amoroso, David Kelly at JP Morgan Asset Management. We'll hear from the White House as well.
Never on with us.
Well, you speak to Jeff. You speak to Jeff. I'll catch up with Rick. Do you want to swap them? Do you want Jeff? Would you like to come to me in the next hour, and Rick can come to this hour?
Yeah, we can do like a switch thing.
Okay,
we can work it out.
We can
whatever you guys like.
He's very sensitive this morning, Jeff. I apologise for that. Tom, there's a difference between being long into the weekend, being short into the weekend, and just hands off into the weekend. I think a lot of people are very, very worried about just being wrong, and this market just going completely in the other direction.
I mean, on an ancient U.S. statistic, the VIX is midway. It's 30 out to 35, and we're at 33.33. So that's it. John, are you leaving us right now?
I'm going. I was going to wait for euro dollar to bring you in 108 handle, Tom, but I'll give it a miss.
Yeah, we'll give it a couple. Wow, 109.04. Seriously, folks, we're making jokes here. John, seriously. This is not a joke.
Hey, Tom,
this is something.
On Thursday,
Thank you.
Wow.
Just the final word between you and ITK. On Thursday, CPI, and then literally as CPI comes out, President Lagarde is going to walk into the room in Frankfurt, Germany, and deliver a news conference.
109.03, we're there any moment. Jeffrey Rosenberg, thank you so much for joining us as always with BlackRock. John Farrell, thank you so much for joining us as always.
Are you going to goodbye me too?
Yeah, but Lisa
Berlin, thank you for staying with me here
this
it's an honor, Tom. It's an honor.
Michael McKee is also with us as well to drive forward as we try to find humor in this trying time. I'm going to open it up, Mike. Jobs report, I'm sure you've got some wisdom. How odd to see a plunge in euro on a logarithmic basis. This is second derivatives moving as well. Do central banks get on the phone and talk to each other?
They do.
With currency moves like this?
Well, they're always talking to each other, is what they would tell you. And if the Europeans were going to intervene in currency markets, they would call the Fed, because the Fed would probably have to help them in the sense of anything that is sold.
To affect the transaction.
To affect the transaction. Yeah. Now, whether they would join in or not, as they did in September of 2000, last time the Europeans intervened, they did it on their own in November of that year. But they do talk about it. This is clearly a reaction to the jobs report. And I said not focused on payrolls, and I was wrong, because the currency traders are. They're looking at the strength of the U.S. economy, I think, and comparing it to what forecasts are now for the European economy. And you see so many people marking down Russia and how bad the economy is going to be there, and the spillover effect that's going to have on Europe, that people are saying, the dollar is going to be the place to be.
Michael McKee, thank you so much. Again, futures at negative 33, Dow futures negative 282. We welcome all of you on Bloomberg Radio and Bloomberg Television on the oddest of jobs days. We're not going to get mathy on you. This is the point where you get on your pencil, your paper, and you start taking notes. Ira Jersey here, our U.S. interest rate strategist and truly expert in the short-term space. You wrote an incredibly important note the day before, maybe 2 days before Ira, saying the short-term paper markets don't show a fear of liquidity. They show something else. What do they describe right now?
Yeah, so it's all about credit spread widening, right? Which is a little bit different than that liquidity piece that you just mentioned. Because if liquidity was really the problem, and you'd have banks that were on the brink of default, a la Lehman in 2008, you would see signs and stress in other markets, and we're not seeing that. But, credit spreads in European banks are widening, and with good reason, right? They have exposure to Russia. They might have lower profitability. Central banks are going to be reducing some of their liquidity. Hugh Worthington, my colleague in Europe, noted that, even though there's been a lot of volatility, there's still going to be monetary policy tightening. Monetary policy tightening means bank profits are going to be lower, so credit spreads go a little bit wider, which is exactly what you've seen. And LIBOR OIS, which is that kind of, canary in the coal mine, some people think has widened out a lot, but it's actually following things like credit default swaps, which have widening over the last month.
Well, but Ira,
so it's not a jump to default risk fear.
But taking a step back, I mean, perhaps this isn't a credit default issue, but taking a step back, people have been looking at the gyrations in Treasury yields. They have been all over the place. Intraday, it has been wild. This is the benchmark stalwart asset of the entire world, used as the haven status, and we've seen that throughout the altercation that we see in Europe. Does that raise concerns about just basic liquidity in basic treasuries?
Yeah, so as the Treasury market's gotten significantly bigger, and now the Federal Reserve is not buying any more assets. I mean, yeah, they're buying, over the next week, but it's 3 or 4 more operations and they're done. you have seen liquidity pull back a little bit, and that's a function of a couple of things. One is the Treasury market is much larger than it used to be. Plus, you have all these bank regulations like the Basel III capital rules don't incentivize primary dealers who are part of larger banking institutions to take a lot of risk. So they're not going to be the how should I say this? They're not going to be the intermediaries that they had been in the past, because they can't just massively increase their balance sheet to take on a lot of risk. So you will see, and we've been talking about this for a decade, Lisa. I mean, I think I was on with you in 2014 when these rules were being implemented, and we talked about, look, this is going to be bad for liquidity for treasuries, and it's proving to be correct. You're going to have these periods that might be brief when liquidity just gets completely dried up, and you see these large swings in order to facilitate people who want to buy and sell treasuries in large size.
But this is important because this is the world's haven type of asset, right? This is the world's most liquid, deepest asset class. So if you have problems with respect to pricing, if you have massive fluctuations, gyrations, considering that this is such a big part of so many portfolios, what's the consequence? Could this be a real problem for market stability?
Well, that is the fear. I think that it's market stability, but keep in mind that you also are coming out of some unprecedented periods, right? So we were in an environment where for 2 years, the primary dealer community and the dealer community as a whole had a backstop buyer. At the worst case, they could sell their bonds to the Fed. So now I think we're in this process of adjusting to a world where dealers have to be a liquidity provider instead of the Fed being the liquidity provider. And that will take a couple of months for us to adjust. And, of course, that's happening in the middle of another crisis in Eastern Europe, which is just would have created more volatility anyway. And then on top of that, we have, an environment in terms of growth and inflation that we haven't seen for 40 odd years. And so all of that is contributing, I think, to this massive uncertainty. Now, it's interesting that you say, hey, we've been really volatile. But look, we've still been in a range from 170 to 2%, basically. It's a 30 basis point range. That's not an unusual situation for the Treasury market to be in if you're looking at 10-year yields.
Well, and we've been asking this all morning, John Farrow in particular, does it make sense for 10-year Treasury yields to be below 1.8% if we're going to get a CPI print of 7.9% next week, if we're going to get inflation that only seems to be accelerating?
Well, look, people don't like when I say this, but we are pricing for stagflation. When you look at what's gone on with inflation expectations in the Treasury inflation protected securities, the TIPS market versus where real yields are, real yields is really where you've seen the volatility. If you want to talk about a less liquid Treasury asset here, Lisa, look at TIPS. TIPS were at negative 40 basis points in 10-year real yields. They're now at, just looking at it on my terminal, negative 93 basis points. That's a 50 basis point rally in TIPS in the last couple of weeks. I mean, that's insane, and that is pricing for slow growth, fast inflation. That's stagflation is by definition.
As we await on a 108 handle Euro IRA Jersey, if we see the 10-year real yield breach below negative 1.00, stunning, as you say, what does that signal to the Fed if the real rate collapses and shows permanent entrenched inflation?
Well, I think it's not dissimilar to what you've seen in today's jobs report. Now, I'm going to look a little bit beyond today's jobs report because it is just one print. But if you have wages that aren't growing and you have real wages that are slowing significantly, that means that you may not be fulfilling in the near future one of your mandates, right? And that's for full employment. Whereas, you also want to keep prices low. So I think they're going to be walking a tightrope. And I do think that the Federal Reserve has to hike this year in order to make sure that inflation expectations, hopefully come down or stay anchored. So they will hike, but I think they're going to wind up hiking much slower than the market was thinking. We've always been in the 4 to 5 hike camp, and I think that's probably what they do this year. But I think that means that they can hike even further going out. So that's why you see maybe you'll see some steepening in the yield curve with short-term yields kind of going down a little bit, but longer-term yields staying where they are, maybe even going a little bit higher.
All right, Jersey, thank you so much. Can't say enough about the research his team is putting out at Bloomberg Intelligence, truly world-class, particularly on the short-term space. Mike, quick to you, one observation. What do you got?
Well, economists like to talk about unemployment falling or rising for good or bad reasons. This time 200,000 people. So more people coming out and looking for work, and employment rose by 548,000. Unemployment fell by 243,000.
Okay. Lisa, very quickly, we got to do a data check here. It's valuable time with Gina Martin Adams we're wasting, so let's be quick here. Euro below 110, a shock. Below 109, wow.
Yeah, 1.089 deteriorating, the biggest one-day move at one point since March 2020 as people are looking at the NATO conference. General Secretary Stoltenberg saying the responsibility is to prevent a full-fledged European war, but that is the discussion he's speaking on an interview and in CNN. How much are we looking at a complete divergent fate between the U.S. and Europe?
The old school DXY index, mostly 54% euro, I think, is going to breach up near 99 here, 98.91 right now. The better math Bloomberg dollar index maybe not showing quite the move, a lesser weighted euro. Right now in the equity markets, Gina Martin Adams joins us, Bloomberg Intelligence equity strategist. Gina, my interview of the week on American wages was Target. $24 per hour is what they need in selective geographies. How are wages right now for the corporations, and what will it do to their margins?
So we're starting to see wages creep up, in particular in the consumer sector. It's interesting you mentioned Target, because this is where we see the predominance of margin pressures emerging are the consumer staples companies, in particular the retailers within consumer staples, as well as the consumer discretionary companies. A little bit peripherally in industrials as well as transportation costs. The transportation industry has certainly been in some degree of margin distress, and other areas of industrials, but it is the consumer companies predominantly, and that's consistent with history. This is where we tend to see wage pressures hurt margins most. They tend to have the most hourly workers. The hourly workers obviously very sensitive to food and energy inflation. The result of that is they tend to see the pressures. They also are struggling to find laborers. And we're seeing that play out in margins at large. It's not yet a broad S&P 500 issue, and I will stress that because a lot of the S&P 500 pays salary, right? And so the wage cost is not necessarily as significant. Labor is not as big an input for many of these companies, but it is a very big issue for the consumer companies, and we're seeing downward revisions to estimates as a result.
We're looking at payrolls, but we're also looking beyond at what's going on in Europe. And right now we're seeing a new high, at least for the day so far, on WTI crude. Right now we're looking at the highest level since May 2011, $111 a barrel. And looking at the prospect of have American companies and frankly stock traders accurately priced what $110, $120 a barrel oil means.
I think we're pretty close, Lisa. I've been watching oil prices really carefully as well, but I think we need to keep this in perspective, right? From 2011 to 2014, oil prices ranged between $80 and $110. Above 110 is increasingly problematic, but it's not terrible for margins overall. We have to get well above $125 in today's state of revenue growth, in today's state of economic growth, to really see margin deterioration. I think we'll have to get to closer to $5 at the pump before we see a consumer reaction as well. Remember, 10 years ago, we're talking now, we saw $4 at the pump. So you've got to see a bigger shock than that period of time when the economy was significantly smaller. At that period of time, we saw $4 actually impact spending, but not enough to throw the economy into recession. So I do think you've got to see $5 at the pump before you see the consumer really materially react. The difference, though, might be food.
Yeah.
I mean, frankly, we've focused so much on what's happening in the energy complex, but what's happening in food prices could be much more profound and create an impact on the consumer that maybe we're not expecting. You're seeing the consumer companies guide us to expect significant margin compression, much less earnings growth as a result of food price pressures. Certainly the cost of wheat, the cost of corn, the cost of soy, all of these prices feed into food prices. I'm a little bit concerned that the consumer ultimately reacts to that even more so than the last cycle, because we really didn't see this in past time.
Gina, that's exactly where I wanted to go. I mean, we're seeing limit up in Chicago every single day for several days now on wheat futures. How much would this affect specific sectors of companies versus, frankly, everyone, because that affects entire economic trajectory?
Yeah, so it absolutely affects the consumer sectors. It's great for industrials. Frankly, if you can continue to see high commodity prices, you tend to see greater machinery spending, you tend to see greater capex in the industrial space. it's not good for the consumer space. So again, it's the typical players. The consumer staples sector, I think, is one of the more dangerous segments of the S&P 500. This is an area where investors tend to go when they're fleeing risk. This is a low beta segment of the S&P. People think, well, consumers won't give up on food. The truth is, while they won't give up on food, they do substitute to cheaper product. And the result of that through the chain of the consumer company is margin pressure. At the same time, they have higher wage costs. So it really is more about the consumer. I don't think we're getting to the point where the consumer doesn't buy iPhones as a result of food prices. We may get there. I think that's a big stretch at this point in time. So we're not likely to see this filter through to the rest of the sectors just yet. But I do think we want to be on guard for it.
Gina Martin Adams, thank you so much. Greatly appreciated this morning. And surely to our team through the, I said this a week ago, and it's another week of war, to our team from Poland and the border, and indeed into Ukraine and over to New York. Thank you so much for your work here. Lisa, let's sum this up. And I know, Lisa, you were really focused on agriculture. The movements here and the litmus paper of the global system in foreign exchange are just extraordinary.
It is an extraordinary moment that has changed a lot of people's perceptions of where we are and where we're going. I do want to bring you another headline from Jens Stoltenberg of NATO when he's speaking on CNN, saying he is the entire alliance is increasing their presence in Eastern Europe. How much does this lead to an escalation? That was the big question after overnight. We did see that attack on a nuclear facility, nuclear power plant. It did not lead to any kind of outages or any kind of issues with respect to nuclear waste or revealing it was not the worst case scenario. However, it is raising questions about what comes next in this escalation that we're seeing more broadly.
In the 4 p.m. afternoon of Ukraine, I believe that is the time zones away, we await a Friday and into their night, 4 p.m. again in Ukraine. There's been a dearth of geography today of Kyiv, of down by the Black Sea, and of course the focus, not pretty much, but to some great extent on Odessa over to the west, but we'll be covering that out of our European news bureaus as we go through the day. It is an American success in America with the jobs report, with the revisions, 770,000, and that is something we haven't talked about this week. Good news on the pandemic. Please stay with us through the day. This is Bloomberg. Good morning.
What a very strange morning. Good morning, good morning. The countdown to the open with futures down 1% starts right now.
Everything you need to get set for the start of U.S. trading. This is Bloomberg, The Open with Jonathan Farrow.
Live from New York City for our audience worldwide, we begin with the big issue, geopolitics and the economy. The data in America is looking good. The situation in Ukraine, anything but. There's a bid in this bond market with yields down 7 basis points, crude at 110.94, and euro dollar, very briefly, with a 108 handle. Team coverage starts right now with Bloomberg's Anne-Marie down in D.C. and Mike McKee on the jobs number. Anne-Marie, it felt like, for many people, an escalation overnight.
Well, it certainly did. And we should make the point, Jonathan, that this is the first time ever that you have a country being invaded that has a vast amount of nuclear capabilities in terms of that is how they get their energy. And this specific site, Zaporizhzhia, 20% of their electricity for Ukraine comes from this nuclear facility. And yes, we should note there wasn't the escalation that many were fearing. This was a training building as part of this massive nuclear site that was caught on fire. And of course, there is much better infrastructure and technology today, but there is growing concern. And I spoke to the head of the IAEA just hours before this happened. And Mr. Grossi had told me and Guy Johnson that there was almost face-to-face contact between the Russian military and the locals trying to fend off and create a barrier outside of this nuclear facility. So just last night, you see the tensions are escalating and growing by the minute.
Mike McKee, these numbers. In America, these numbers are great. this is what's really tough at the moment for a lot of people in this market. You've got the situation that Anne-Marie describes and the situation in America, 678,000. And Mike, you and I went through these numbers. It just felt so bizarre that a number that decent, an upside surprise that great, would be met with a collective shrug.
Well, I don't think it's a shrug. It's sort of a question of what do I do with this number? Because it does show the United States economy and the labor market here are getting stronger, but how is that offset by what's happening overseas? 678,000, as you mentioned, is the headline number. And basically it tells us that what Jay Powell thought was going to happen is happening. A lot of people out of the labor force, a lot of companies not hiring in January because of the Omicron variant. It goes away, people come back. The unemployment rate falls to 3.8%, where we were in December, and we see the average hourly earnings fall a little bit. It looks like a compositional thing. More people coming in with lower paid jobs. And then you have the labor force participation rate ticking up to 62.3. Again, another sign that things are getting better overall for the U.S. economy.
And meanwhile, corporations have got to adjust to the situation that's taking place in Ukraine and Russia. Here's another company, Microsoft, to suspend new sales of products and services in Russia. Anne-Marie, we have seen company after company do the same thing. And the pressure's building on the Europeans and the US to do something else, the step up in sanctions. Now, we touched on this briefly through the morning. Let's do it again. Speaker Pelosi, Anne-Marie, ban the oil coming from Russia.
Difficult position the administration's in, Jonathan. Let's just put it that way. They're trying to fight inflation at home. If you ban Russian oil and gas and these products, you are going to see a spike across the board in energy prices. And right now, the United States imports about 8%. So it doesn't sound like a lot. But when you actually look at the rankings, Russia is third after Canada, Mexico, and even before the United States ally, the Kingdom of Saudi Arabia. So you have a bipartisan support. Speaker Pelosi coming out and saying, ban Russian oil imports. This is going to put immense amount of pressure on the administration. But of course, Jonathan, we know Jen Psaki yesterday, the president's press secretary, said that they are looking at this strategically, which means they want more supply on the market. And if they ban Russian oil and gas, they know what that means. That is going to be higher prices. But Jonathan, Microsoft is just the latest company. How many companies, executives, traders are we talking to that are just saying that they're shunning these assets because they don't want to deal with Putin's Russia?
Company after company. No one wants to touch it right now for a whole bunch of reasons. Secretary Blinken on tour through Brussels today, a NATO meeting, a G7 meeting, a ministerial meeting taking place at the moment, about to start. Maria Tadeo joins us now from Brussels. And Maria, let's discuss it. Are you getting the sense that people that you've met with, heard from this morning, consider overnight an escalation, one? And two, does that escalation require a step up in sanctions?
Well, they do argue that what we saw last night was a real escalation. I mean, we saw the footage, and this is very near to a nuclear plant. Clearly, this is very, very dangerous, and some of the officials I spoke to this morning told me this is, quote, now playing with fire. The other thing they worry about, of course, is that, John, for 38 hours, we've heard the Russians continuously push this nuclear narrative, where Vladimir Putin says, I will have to put my nuclear deterrents on high alert. His foreign minister repeated that message yesterday, and of course, overnight, we had the footage of that fire that broke out. Again, there's no nuclear leakage. We know that the reactors are working fine. 2 people were injured, but the big question is, what does Russia do with this plant if they're in control of it? And then the second one is what to do and how you respond with. We already had a clear indication from NATO today. The Secretary General saying we're not at war with Russia. We don't want to have a global conflict over this. We're not going to put troops on the ground, and we're not going to enforce a no-fly area over Ukraine because we don't want to risk it. But Russia needs to know that we will defend our 30 members, that this is an alliance that is now united and stronger than ever. And again, what's interesting to me is that they do not mention anything related to nuclear. A lot of them believe this is bait and they don't want to take it.
Maria Tadeo out of Brussels today. Maria, stay close. Our special thanks to Anne-Marie and to Mike McKee as well. Just working through the European moves this morning. We're down 11% on UniCredit. SocGen down by 7.6%. Deutsche Bank down by 7.3%. And look at what's happening with the currency pair, euro-dollar. Very briefly, a break of 109. 1.0910. Next Thursday, literally seconds apart, you get a US CPI print, then seconds later you hear from President Lagarde. Euro dollar going into that, 109. I want to get to BlackRock's Rick Reeder, joins us every Payrolls Friday. We're lucky to have him again. Rick, what do you pay attention to? On the one side, you've got this great data in the US on payrolls, and on the other side, you've got a tragic mess playing out in Europe.
Jonathan, it's a pretty extraordinary time. It's almost like the more you learn, the more uncertain the markets are. So what do you pay attention to? Listen, I think today the payroll report was not that surprising in terms of we know the jobs market is red hot. We know that there still aren't enough people for the jobs that are available in the marketplace. So I don't think that was a big surprise. I would say actually the strength of it, how robust it was, that was a bit higher. I agree with what Mike McKee said. The wages, when we looked at the wages numbers, that was surprising because certainly everything we see from companies, everything anecdotal suggests wages are still firm. But so I believe there was definitely a compositional impact, and that clearly was it. So that wasn't that surprising. Then you go to what is just almost impossible to interpret in terms of our market's reaction is how to think about the situation in the Ukraine. Listen, then, we've got that. And then at the back of this, you've got a Fed, and by the way, now an ECB, where policy is very hard to think through. How do you tighten of significant magnitude when you've got an inflationary shock, but what's driving the inflation is not really impacted by what, or won't have much of an influence from Fed or ECB reactions, but certainly the Fed's got to get to neutral. So you've got a lot of tricky things that are playing on the market. And so what happens? People just hunker down.
Rick, can we talk about the transmission mechanism for the tension in Ukraine at the moment? I think for a lot of people, they believe it's the commodity market, real trade, and not just crude, not just energy, but things like wheat, corn, etc. Is there a financial transmission mechanism, a financial channel that you're focused on the moment right now that you're concerned about?
Not really. Listen, the one thing that is really critical is, like I say, what happens is when the Fed goes to tighten, the ECB goes to tighten, you do create a dynamic. You've got to tighten financial conditions. They've got to be really careful about how you tighten financial conditions. Listen, the markets, the equity markets, the spread markets, the credit markets are helping you if that's what you're trying to achieve from a financial conditions point of view. That we're clearly focused on. Listen, the currency markets, the flow of capital around the world, that's something you've got to keep a close eye on. And then, quite frankly, intra the markets, individual credits, you brought up, it's one thing, energy, commodities we knew, but food is starting to, and you think about all the multiplier effects. So we're just trying to look through companies and think about what's the secondary and tertiary effect of their businesses, their margins, et cetera, their input costs. So there's a bunch of those factors that we're trying to work through.
Rick, how active have you been on a week like this week? You've talked about building up that cash position ahead of time. We've had a massive dislocation in the market. What have you been buying?
Treasuries in the, listen.
Connection problem there with Rick Reeder of BlackRock. I think that connection problem explains itself. That's the challenge for a lot of people. You've built up a cash position, you have a massive dislocation. How do you put the capital to work? In that very short answer we got from Rick there, Treasuries maybe. Treasuries maybe. I want to go through the price action for you just to get you up to speed. Euro dollar 109.14. We've got this weaker euro story rather, for a fifth straight session. In the commodity market, crude, energy, higher again. WTI at 111. We've got 113, call it 114 on Brent. Guy Johnson, who'll pick up the coverage in about 50 minutes from now. We're going back and forth on this. This inverse correlation that we're seeing take place between energy and the euro, that is a big problem for this ECB. Should we get you some movers? Let's do that quickly and bring in Abby. Morning, Abby.
Morning, John. And that tension that you're talking about between the humanitarian crisis and war in Ukraine against the positive job report here in the U.S. really shaping movers. As you can see, Raytheon, the defense company, up 1.2%. Chevron higher, up slightly at this point off the highs, but up with oil back above 110 per barrel firmly for both WTI and for Brent crude. And then on the other hand, we have travel movers lower. Carnival Corp, one example, down 2.9%. And as yields are lower, bonds bid on the risk-off tone, you can see banks lower. JP Morgan right now down 1.7%.
Abby, thank you. Thank you very much. Coming up, President Biden avoiding energy sanctions despite a growing pushback in Congress.
And I'm banning travel to America by more than 50 Russian oligarchs, their families, and their close associates.
That conversation up next.
Omicron variant and the latest wave have an impact on not only consumer trends, but your business? And do you expect the booster shots to make a difference?
Yeah, booster shot will make a huge difference. I think it's been accelerated by the huge leadership of the current Prime Minister Kishida. And I'm hopeful that our business will come back in Japan around perhaps mid-February to end of February, because we expect that a peak time will come around that time. And then the government will shift toward the reinvigoration of consumer. That will help us. And we had seen the huge comeback of the business in December when the things were toward the normalization. So I believe the business will come back, and I'm very much hopeful.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Russia invades Ukraine.
We have proven our strength.
The nature of this war changed yesterday.
Turn to Bloomberg for up-to-the-minute reporting from around the world.
Ground troops are closing in on the Ukrainian capital.
Swiss abandoned neutrality.
And analysis of what it all means to you.
Energy is on the table.
We could see oil prices moving closer to 120.
There is a lot of interest to offload Russian assets.
Look to see more companies announce their exits from Russia.
Keep it tuned to Bloomberg Television and Radio.
We don't have a strategic interest in reducing the global supply of energy, and that would raise prices at the gas pump for the American people.
The White House continuing to rule out Russian energy sanctions, putting the Biden administration at odds with a growing chorus in Congress.
I'm all for that. Ban it.
Ban the oil.
Ban the oil coming from Russia.
Mike McKee, I'm all for it. Ban it. The words of Speaker Pelosi.
Well, I'm not sure you need to do that because we're already seeing, as you were talking about earlier on the show, the fact that people aren't touching oil from Russia. The shippers don't want to deal with it, and the oil companies don't want to deal with it because they don't know whether they'll ultimately be sanctioned for dealing with the Russians. So you're getting the effect without having the bad PR or the bad news going to Vladimir Putin that you're doing this. Now, it wouldn't make as much of a difference in the United States, and of course, Anne Marie is much more of an expert than I am, but wouldn't make as much difference to the United States because in this country, we don't import very much Russian oil. It's Europe that has to make the decision, and that's going to be the fraught decision over the weekend, I think.
Mike McKee, did you ever think we'd speak twice in the morning and not talk about payrolls for the second time? It's unreal, isn't it?
It is. It's a very, very strange time, and I think he got cut off very quickly, but I thought the answer of the day was Rick Reeder when you asked him, well, what do you buy? And he said, I don't know. Treasuries, maybe?
And you've built up a cash position, Mike. You get the massive dislocation, and you're still scared to deploy it. Not that Rick is, and Rick can speak for himself, but I think that's always the difficulty, Mike. You built up that cash position. The second decision you've got to make is when you put it to work, and these kind of things make people very worried about putting capital to work.
Well, you have a lot of different moving parts. A very strong U.S. jobs report, strong economy here, fears about what happens to the European economy, and then you're going into Friday. You don't want to be long going into this weekend, given just the news we had last night and how it freaked the markets out. So if you can't trade for 2 days, that's a tough place to be in. So I wouldn't look for a lot of action today.
And Mike McKee, thank you. Let's turn to our panel. iCapital's Anastasia Amoroso, JP Morgan's David Kelly. Anastasia, I'll start with a difficult one. Do you just assume that we get a sovereign default out of Russia?
I mean, we probably shouldn't assume that, but the markets have already assumed that, and the markets, frankly, have priced it in. I think if you own Russian assets, they're just not investable at the moment. They're not tradable. And as a result, a lot of people are marking some of those things down to market. The markets are pricing in about a 56% possibility of a default. And look, unless the situation changes on the ground, I think that's going to be the status quo for a while.
We've priced a lot, David Kelly. Just one second, Anastasia, we'll come back to you. I just wanted to bring in David to get his response to this. We've priced a lot, David. When you have price action and swings this brutal, this big, you have to start to wonder whether the biggest risk right now is escalation or de-escalation. Can you imagine if we get a headline that says we get a ceasefire, the kind of moves you'd get off the back of that? Just how difficult is it to navigate things at the moment?
Well, I don't think that's the headline that would change the story. I mean, unfortunately, I don't think anybody would believe for 2 minutes what Vladimir Putin is saying about any ceasefire. It would be assumed to be a fake out and another way for him to reposition himself. Now, if you saw a headline that Vladimir Putin had been replaced and the Russian higher-ups had found some way of replacing him with a more rational leader, now that could cause a huge market swing, but any ceasefire wouldn't make much difference because nobody doubts that at the moment Vladimir Putin is sort of doubling down on, he's got a strategy, he's going to invade Ukraine, he's going to take it over, and as an autocrat, he can't be seen as second-guessing his strategy. So I don't believe a ceasefire would change the story.
Anastasia, forgive me for jumping in. Carry on, please.
I mean, I do agree with David on this one, that for now, the status quo in Russia and Ukraine seems to be that the escalation is more likely than a de-escalation. I mean, if you are in the shoes of Vladimir Putin, who is trying to get something, some sort of payoff for this unspeakable invasion, then the time to back down is probably not now. The time to press on is now. So unfortunately for the markets, and especially for the commodity markets, the most likely scenario is we see further military escalation, which is going to require tougher sanctions. And I appreciate the notion for now that we're not going to sanction energy exports or energy imports from Russia, but the reality is a lot of them are already being self-sanctioned, and I do think that this could have further ripple effects. So the tough part for the markets right now, and this is the reason why we're not talking about the payrolls report, is that this commodity price pressure that was supposed to abate is not abating, and the supply chain disruptions and the bottlenecks that was supposed to recede as we venture out of COVID, we still have another risk of supply chain disruptions because of what's happening on the ground in Russia and Ukraine. So this makes it a pretty tough landscape for the market at the moment.
So what is the biggest issue for you, David? Let's just get our hands around that and think about how you approach it, your framework, and what you look for in this market. I want to understand from your perspective, is the biggest issue right now more inflation, demand destruction, or a mixture of both?
I think the biggest issue is continued supply disruption, and the two big issues. One of them is continued supply disruption. The other one is what all this will do to the European economy. I mean, even if Europe did not decide to do do energy sanctions, which would be tremendously painful to Europe. If something cuts off natural gas flowing through Ukraine, it could still have an enormous impact on the European economy. So that's vulnerable. And then another thing which nobody's talking about is I do think that China is gradually losing its grip on the COVID problem, and you could have a further supply disruption coming out of China if they have a massive outbreak of coronavirus. So there are a lot of problems there, and I think it's a toxic mixture. But the one thing I would say that I do think this payroll report is important because it says the U.S. economy had a lot of momentum I think the U.S. economy right now can absorb what's going on in Ukraine, what might happen in terms of China supply. I think it can absorb all of it without going into recession. Perhaps that's the most important takeaway for investors here.
A couple of important headlines crossing the Bloomberg terminal at the moment. Allow me to bring them to you. We understand that we've had a conversation today, a one-hour phone call between the German Chancellor Scholz and Vladimir Putin of Russia. Looking for some headlines from that. We do have a headline from the Dutch government, though, that will be likely of interest to all of you. Don't expect we'll be coming in with new sanctions today. Let's get to Anne-Marie down in DC on this line. Anne-Marie, the Dutch foreign minister, we don't expect we'll be coming up with new sanctions today. Is that your read on things in Washington too?
Yeah, well, listen, Jen Psaki yesterday made it very explicit, Jonathan, that the president is trying to mitigate the implications of putting sanctions on Russia, specifically oil and gas, which is the lifeblood of the Russian economy, trying to make sure that they're not hindering and making it harder for consumers at home, as poll after poll over the last 6 months show that this is what Americans care about, rising inflation, and this is what their biggest concern is. When it comes to Russian imports, they have been dwindling over the past few months, but 2021 accounted for 8%, just after Canada, Mexico, and before Riyadh, it was Russia. Now, that's not all crude. Crude is about 3%, but all petroleum products that they import. But we should note, Jonathan, even if the administration doesn't want to take the win on we're going to ban and shun and sanction oil and gas the way we've done with Venezuela and the way we've done with Iran, refiners are not taking it on. We don't have the numbers yet, but I can't tell you how much the reporting is out there, the people I'm talking to, that individuals just don't want to touch these assets right now. Some of it is legal concerns, and other of it is just moral obligation.
Sanctioned in all but name seems to be the takeaway of the week so far. AMH down in Washington, stay close. Lucky to have with us today Anastasia Amoroso and David Kelly as well to work through the opening bow. The headline as follows from the Dutch foreign minister: we don't expect we'll be coming up with new sanctions today. We'll be assessing the effects of sanctions on Russia, speaking to some reporters in Brussels at the moment. Coming up, the morning calls, and later an interview from Washington, the view from the White House, and Secretary Walsh around the opening bout. That's next. This is Bloomberg.
Energy prices and a short supply of key chemicals that produce synthetic fertilisers are sending pig, cow and horse manure prices soaring. Even human waste is in demand as farmers hunt for alternatives. Fertiliser helps increase crop yields.
You can see how much moisture is held into this. It's a lot of organic material into the compost, so it breaks down. The manure and the straw breaks down into a friable mix that can be mixed into your soil in the ground and for growing a whole range of different vegetables. Holds the nutrients in, holds the water in, and it really increases the kind of biodynamic profile of the soil.
The recent price spike could mean more farmers going organic for the long term.
Crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
this market right now seemingly stuck between decent data in America and a really tough situation in Europe. The equity market can't catch a break. We're down 0.9% on the S&P. That's the price action. Here are your morning calls. First up, MKM Partners downgrading Zynga. The analysts seeing little remaining upside after failing to attract further takeover bids. Raymond James downgrading Best Buy. The analysts seeing a number of ongoing headwinds following its quarterly results. And finally, Deutsche Bank upgrading Six Flags Entertainment to a buy, expecting a more active and strengthening consumer to drive future earnings growth. Their stock is positive by about 1.6%. Coming up, the opening bell on Wall Street, plus an interview you do not want to miss. A conversation with the U.S. Labor Secretary Marty Walsh following payrolls, Russia, and a whole lot more. That's up next. This is Bloomberg.
the Delhi airport, and behind me you can see SpiceJet 737 MAX aircraft. That Boeing is going to compensate SpiceJet in form of cash and aircraft. There's a big celebration happening at the Gwalior airport. As you can see, they've literally rolled down the red carpet for SpiceJet chairman Ajay Singh. There are balloons, there are flowers. This is a big deal for SpiceJet because it is the only Indian operator of Boeing 737 MAX planes currently.
A lot's happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
But we need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
It's 25 seconds away from the opening bell in New York City this morning. Good morning to you all. Coming into Friday through Thursday close, we were only down 0.5% on the S&P. We take off more weight than the benchmark in America. We're down 0.9% on the Nasdaq, down 0.8%. On the Russell, negative 1 full percentage point. That's the opening bell. Switch up the board and get to crude. Crude last night with a lift, and then a lift again this morning, up by more than 4%, 112.60-ish. Yields lower, almost 10 basis points to 174.27. Would you expect a bid through the whole of the Treasury curve with the jobs numbers that we've just had in America? That's what you've got. Euro dollar, a brief break of 109 to the downside, back to 109.15, negative a little more than 1%, negative 1.36% on euro dollar. Lucky to have with us today two great guests, Anastasia Amoroso and David Kelly. Anastasia, I just want to start with the Fed. Chairman Powell, to me this week, didn't sound that dovish. What was your take?
Look, I think he sounded more cautious and less hawkish than he was previously coming across as, and that was a positive for the markets. Now, I think the markets are appreciating the fact that he may be a little bit less hawkish and he may not hike as much as he was previously anticipating, but the reality is he is hiking into a slowdown. And David is right, we're not seeing a massive slowdown by any means in the US economy, but if you think about it, several quarters out, the current commodity price shock that we're experiencing is likely to destroy some demand. And so we're starting to see across the street downgrades to GDP, downgrades to earnings expectations. And so that's the environment that he's hiking into. So that traditionally has been quite challenging.
David, is this environment that Anastasia describes going to do some of the hard work, the tough work for this Federal Reserve?
Only to some extent, but I think it's not just about the economy for the Fed. I think it is also about financial markets and about the bigger picture. You know, what struck me about Chairman Powell's testimony is he really wants the Federal Reserve to be a source of stability here. And so I thought it was really interesting that he actually said precisely what he intended to do at the March meeting in terms of calling for a 25 basis point hike and recommending it to the others. You know, normally a Fed chair would not tip their hand on that, but I think he's deliberately trying to send signals to markets. I think the Fed was going to be very slow and very deliberate and very open in how it's gradually moving monetary policy to try and reduce any uncertainty coming out of this. Because I think what the Fed was most worried about here is just the volatility and the uncertainty of the situation. But I would emphasize we've got massive excess demand for workers in the economy. U.S. consumers are not as vulnerable to high energy prices. They may be grumpy, but they're not as vulnerable to high energy prices as they used to be. And also we're seeing a pickup in the service sector as coronavirus fades, and that was very clear in the jobs report. This gives us a buffer in the U.S. to keep growing. And remember, the unemployment rate today, 3.8%. That's lower than it's been 97% of the time in the last 50 years. So it's a full employment economy. So the Fed, you know, I think the economy may slow some in momentum here. It actually needs to slow momentum. So we're not in that bad a situation in the U.S.
The numbers have been fantastic. To David Kelly and Anastasia Amoroso, to you both, thank you so much for being with us this morning to work through this. The focus is all on Ukraine, but the jobs numbers in America right now are brilliant. 678,000. For payrolls, big upside surprise. The median estimate was 423. The previous, a revised 481,000. As David Kelly just said, unemployment 3.8%. Set the stage for next week. That Thursday morning, when at 8:30 Eastern time we get US CPI, and the current estimate is 7.9%. Then literally seconds later, we'll hear from President Lagarde of the ECB with euro dollar south of 110. Joining us now, I'm pleased to say, on the payrolls report, on TV, on radio, is Marty Walsh, the US Secretary of Labour. Mr. Secretary, it's great to catch up with you, sir. I cannot think of the last payrolls report that got this little attention. Payrolls at 678 because we're focused on everything else. Secretary Walsh, your take first of all, and then we need to get to the much, much bigger issues worldwide.
Yeah, no, you know, a good solid report, good broad-based gains in all sectors. Pretty happy with that report. Clearly, we have more work to do. You're absolutely right. You know, my heart and prayers go out to the people of Ukraine. That's kind of front and center for everybody in the world. The world is certainly united behind Ukraine, and you know, hopefully we can get back to. Hopefully, we can get through. Ukrainian people can get through the challenges they have, and we can go back to talking about the economy again. I would much prefer to be taking strong questions from you today about the economy and Ukraine people having peace and freedom today.
Secretary Walsh, I agree with you. I think we all do. Let's get back to those days as soon as possible. Right now, as you know, though, we've got to talk about Russia. Microsoft, moments ago, in the last 30 minutes, made the decision to suspend new sales of products and services in Russia. Many companies are doing the same thing, whether they need to because of sanctions or they choose to because they feel like they have an obligation. Do you think, sir, for you, as Secretary of Labour and for the administration as well, do American employers have a moral obligation to pull back from doing business with Russia?
I think we have to do whatever we can in as many places we can to support the Ukrainian people. You know, the president said it at his State of the Union the other night from the stage. I think a lot of countries and a lot of companies are doing what they need to do. I think that as we continue to move, as the conflict continues to move forward, I think that there'll be a lot more companies in America, and not just America, around the world, will be taking steps like this against Russia.
The refiners in America also not touching Russian crude as well. They're choosing to pull back from that. Secretary Walsh, is that a good thing?
Yeah, well, I think you know, as far as the conversations, there are going to be many conversations. I know that here in the United States, Speaker Pelosi, Senator Manchin, Senator Murkowski, and some other folks are asking for that, and I'm sure that the president and the White House were evaluating the different situations. But again, I think that the whole world is going to continue to put sanctions on Russia as we move forward here.
I know that you've been looking.
The pictures that we're seeing broadcast from Ukraine are horrible.
No, they're heartbreaking.
When you go after buildings with older people in the schools, it's just uncalled for.
So when refiners pull back, I guess what I'm trying to work out, Secretary Walsh, is that you've tried for an energy carve-out. A lot of people still don't want to touch crude, even if there is a carve-out. I want to understand the message the administration is sending right now. Do you want refiners to buy that crude, or do you want them to step back from it? Is that a welcome development, even though the sanctions aren't there?
Well, again, I'm not in a position to be able to speak on that right now. I know that as the president had laid out his sanctions last week, or actually over the last 10 days, he's been very thoughtful in doing them, working across the globe and doing them. And I think I'm sure those conversations are happening right now with world leaders.
There's a conversation that hasn't happened, apparently, and I wonder if it has happened subsequently. I couldn't get this information from the Treasury Department in the last hour, so allow me to put this question to you. This came from the Devon Energy CEO, big employer here in America, crude explorer. This is what they said to us this week. Secretary Walsh, quote, "I'm a little mystified that there hasn't been some dialogue. If they were to reach out, you, the administration, to them, and maybe be a little bit more collaborative, it might provide some cover from investors who might be disappointed they're boosting output." Have you reached out to any employers in the oil patch to boost production?
To this point, I'm not aware of any conversations, but I'm sure that there are conversations going on. Again, I have not been part of those. Have not been party to those conversations. If asked and when told to by the president, I will absolutely be having those conversations.
Do you have to wait to be told to have that conversation?
Well, certainly this is a very coordinated effort when you look at what's been going on here with the powers, the countries across the globe working collectively together. We've never seen, I shouldn't say never, I mean, having the strength of NATO seem so close together is really amazing, and working collectively together. So again, I think there's been a process here as we move forward.
Crude right now, WTI at 112.87. You know as well as I know that wages haven't been keeping up with inflation. Is there anything you can do in the short term? When we heard from the president earlier this week in the State of the Union, there were some big long-term goals, long-term investments that he wanted to make to build out the productive capacity of the economy. Is there anything we can do in the short term here, Secretary Walsh?
Well, I think if you're talking about inflation, I think what's happening here is, I mean, we're in the midst of a worldwide pandemic. Certainly that's one. We had the midst of dealing with supply chain issues. Now we have a major conflict in the world that where all eyes of the world are on the Ukrainian people in Ukraine. And I think that as we move forward here, and the question earlier, as oil supply gets cut back from Russia, if that's what ultimately happens, we're going to see increase in gas prices. And I think that there's a point here that we have to just continue to move forward. The president has been very clear on bringing down inflation. He talked about it at his State of the Union. But we're living in very interesting dynamic and times that are happening here. So again, there's lots of conversations and lots of actions that will be taken over the next weeks and months.
You're in a difficult spot now, and I understand that, because you need to try and stay in your lane and not get ahead of what other people haven't said yet. But have you spoken to the administration this morning, and your message following the overnight events, which was shocking for so many people? I haven't heard anyone yet call that an escalation from the US administration. Secretary Walsh, do you believe the events of last night were an escalation?
Well, I'm sure the president's going to address that when he speaks later today.
When can we hear from him?
I think he generally has not too far from now, a couple hours from now. I think he'll addresses the country on the issue of the jobs, but certainly the biggest issue of the day is Ukraine. The biggest issue of our moment is Ukraine.
Well, I look forward to hearing from him a little bit later. I understand, Secretary Walsh, there's only so much you can say, sir, and there's only so much you can say this morning as well. Thank you for being with us, and I think we're both on the same page. When we can just talk about payrolls for 10 minutes, I can't wait for that moment, sir. Secretary Walsh, thank you.
Thank you.
Fantastic upside surprise on a payrolls report, and as you all know, no one's really talking about it, are they? They're only talking about one thing. It's company after company pulling back from doing business with Russia. It's energy, 115 on Brent, WTI on 113, and we need to work out two things. One, the events of overnight. Does the administration consider that an escalation? And two, if they do, Do they need to step up sanctions? And right now, as you know, there is a split between members of Congress, including Speaker Pelosi, who would like to ban the imports of Russian crude, and the administration, who is less keen on doing that at the moment. The issue, where the tension is, so to speak, is why they haven't just called domestic producers. And some people have reached out to me this morning and said they're private companies. If they're not going to boost supply at 115, at WTI at 113, why would they? Well, let's go over the quote from Devon Energy again and work through it. I'm a little mystified that there hasn't been some dialogue. If they were to reach out and maybe be a little bit more collaborative, it might provide some cover. Call their bluff, call them. Find out, is what some people are asking anyway. Come up, NATO and its members committing to unity.
We will continue to do what it takes to protect and defend every inch of NATO territory.
The conversation from both Brussels and Washington up next.
Exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
It's almost the end of the year, but Bali is still quiet and empty. I am here in Kuta Legian, one of the main walking streets here that is used to be a tourist spot for beach, dining, shopping. But many shops here are still closed. Most of the outlets are either for rent or for sale as they have run out of business.
Saya kerjanya di sini udah lama, udah ada 10 tahunan di sini kerja. Masih sepi sih, nggak kayak dulu. Kalau dulu kan rame, sekarang ya ada 1-2 itu ada, tapi nggak kayak dulu. Kalau dulu rame sekali, sekarang paling dapat jualan ya 100, 120 gitu, 200 ya. Kalau dulu sih ya nyampe dah 1 juta, 1,5 itu nyampe dapat jualan, bisa sampai 2 juta dulu. Sekarang nggak pernah lagi dapat segitu, sama aja. Belum ada turis ke Bali, masih ya domestik aja.
While Bali has reopened its borders for foreign tourists since October, they're still not coming in. Many international airlines are yet to reinstate their direct flight to the island. Balinese people here really hope they can see more people from Australia, China, and Europe to come visit next year.
Continue to do what it takes to protect and defend every inch of NATO territory. We have a responsibility to ensure it does not escalate and spread beyond Ukraine.
Defend every inch. That's the line coming from both the NATO Secretary General this morning and Secretary Blinken.
As the Secretary General said, ours is a defensive alliance. We seek no conflict. But if conflict comes to us, we're ready for it. And we will defend every inch of NATO territory.
Back with us down in DC, Bloomberg's Anne-Marie. Anne-Marie, put it all together for us.
Blinken there saying he's going to defend every inch of NATO, and we've seen the president want to send troops to bolster the eastern flank, Lithuania, Estonia, Latvia, as well as Poland, which, Jonathan, you know, we talk a lot about the sanctions and the companies pulling out of Russia, but Poland has become ground zero in terms of humanitarian crisis. We heard from the UN Commissioner of Refugees talking about 1 million people already fleeing into Poland, and the numbers are staggering as potentially 7 million will be displaced. But the situation on the ground in Ukraine, Jonathan, after last night, though, is incredibly worrisome, and the tension is just escalating after we had this fire at the biggest nuclear facility in all of Europe. And this is the first time that a country that has a vast amount of nuclear power is being invaded. And this, I think, just stoked fresh concerns, and the president immediately was on the phone with President Zelensky, imploring the Russians to pull back from this facility.
The Ukrainians have been asking for what's described and called as a no-fly zone. Do you have any response from the administration on that request, Anne-Marie? Because it's been the same over and over again repeatedly from both NATO members, including the United States, that they don't want to go there.
Well, the worrisome of going there is that basically means almost troops on the ground, right? This could potentially mean a war between U.S. troops, NATO allies, with Russia. And the president has said time and time again, and has been very direct about it, he will not send U.S. troops to Ukraine. And I don't see that changing anytime soon.
And as you've been speaking, President Biden is set to speak with the Polish president this morning, getting that headline as well, Anne-Marie. Anne-Marie, stay there. I'm going to bring in Mike McKee, because Mike McKee, I keep coming back to this. I was with Secretary Walsh just moments ago. No one's really talking about this payrolls number. I wonder, Mike, after CPI next week, are they going to be talking about CPI going into the Federal Reserve meeting the week after?
They are going to be talking about CPI, and it's not really going to be so much about the number that we get next week, because we know it'll be high. The forecast at this point, the consensus is like 7.9% for the headline. But look at what oil prices are doing just again today, another $4 or so up. That's really going to weigh on inflation, and we're getting into the kind of numbers that start to weigh on people's minds. I think we had on an analyst earlier today who said you need, $5 gas before people really start changing their behavior, which may be true, but we might be heading in that direction. And so the way this is all playing out in Ukraine, bad news for the economy, and it'll keep the Fed on their toes. And if the Fed does 25, which Jay Powell said they're going to do, all the questions are going to be, well, in May, are you going to do 50?
You know that's going to be the question, and I think that's what City's looking for. 25, March 16th, May 50. Just in the control room, can we get the shot up in Brussels? And hopefully Maria Tadeo's there. Maria, I know you're just standing by waiting for Secretary Blinken, so let's listen in.
The very fundamental principles that we've established together after 2 world wars that are so important to keeping peace and security for everyone. Principles that President Putin is egregiously violating every single day. The notion that one country can't simply go in and change the borders of another by force or take it over. The principle that one country can't dictate to another the choices that its citizens would make about their future. The principle that we're past the time of spheres of influence where one country subjugates its neighbors to its will. All of those things are at stake. And if we allow those principles to be challenged, as Putin is doing now, with impunity, that will open a Pandora's box of trouble for not just us, but quite frankly for the entire world. So the stakes are high, but because we're doing this together, I'm very confident that we'll succeed. I have to say, finally, the two of us have been working like this for many, many months. And that collaboration, that partnership, that friendship is also what makes a difference, and I'm really grateful for it. Thank you.
What's your message to the people of Ukraine?
Secretary Blinken there just walking away. If Maria can hear me, and I'm not sure if Maria can hear me, I hope she can, in Brussels.
I can
hear you. Fantastic.
Yes, I can.
Just walk me through what we just heard, who Secretary Blinken was with, and what you expect through the rest of today.
Well, I think what we need to factor here is there's two big things. One is that NATO, of course, has made it very clear that there won't be a no-fly area over Ukraine, and you could hear the concern and the fear here. What they worry, Jonathan, is that especially after yesterday, we see Russia putting up a fight, and particularly a fire close to a nuclear plant. This has really set up alarms here that perhaps we're entering now into a new phase of this conflict that could be much more dangerous. So you can hear from NATO that they don't want to risk it on any front. Now, if you put up NATO flights or NATO planes on the sky to try to prevent Russia from bombing Ukraine, well, you can see that if there's an accident, this would escalate in many, many ways. So we're not going to see troops on the ground. They repeated that. We're not going to see NATO planes enforcing a no-fly area on Ukraine. They continue to say they stand with the people of Ukraine. But today, if you're in Ukraine, the reality is you probably feel very lonely.
Maria, do they consider a step up in sanctions as an escalation or potentially escalatory for the Russians to be on the receiving end of that? Do they consider that as an escalation themselves?
Well, what they find is that it's very difficult to read what Russia is doing, because if you look at what Vladimir Putin said yesterday, is that this military operation, which, by the way, remember, in Russia, the word war is not allowed on state media. They talk about a peacekeeping operation in Ukraine. They talk about Western propaganda. They're not bombing anyone. But Vladimir Putin says this operation will continue, and Russia has strategic goals to complete in the country. Of course, that incident that we saw near a nuclear plant set, as I said, a lot of alarm bells this morning in Europe. I know of officials who say this has now taken a very ugly turn. With sanctions, I know there is an active debate going on here as to whether or not there should be a full ban on Russian energy, oil and gas, whether Sberbank could also be cut off fully from SWIFT. Remember, that is a bank that is used by Europe to factor those transactions. But again, at this point, it does seem that economic measures for the time being, because they take time to really hurt and bite the Russian economy, has not deterred Vladimir Putin. He continues to say there is a military mission to fulfill in Ukraine, and Russia is determined to achieve its goals.
Maria, today, brilliant work from Brussels. I know you've got to run, so thank you very much for your time and for squeezing that in. AMH, I just wanted to give you the final word. The guide through this morning into the afternoon, please.
Well, I think you're going to hear more calls, Jonathan, from Capitol Hill about that, what Maria was just talking about blocking Russian oil and gas. Now, for the U.S., you're hearing Speaker Pelosi almost break with the White House, saying ban it now. And then you have Jen Psaki, the press secretary, saying that this is something that they're just not going to do right now. Strategically, it doesn't make sense, because if you take more supply off the market, that just means price is going to go up, and that is going to impact U.S. consumers. What they have said over and over again is that they want to hurt the Russian economy. And we should make clear they are hurting the Russian economy, especially when it comes off not being able to, Putin being able to access more than part of that $600 billion in reserves, which he, by the way, he set up strategically after the sanctions of 2014. But, Jonathan, the pressure is going to mount on the White House to potentially do this.
AMH, thank you. Secretary Walsh predicted it 20 minutes ago. Here's another one. FedEx suspending all FedEx services in Russia and Belarus. From New York, this is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit Search Go to find answers now.
How difficult was it to go to investors and say, invest, give money, put money into a travel tech company within this environment?
It wasn't that difficult because TravelPerk is doing much, much better than the rest of the industry. In fact, we are at the moment growing at 4 times revenue of pre-COVID numbers.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
"26 minutes into the session, does anybody remember the payrolls number? It was just south of 700K. Look at this move, down by more than 1% on the S&P. And look at this move in the bond market. Really solid payrolls report. Next week's CPI in America, the estimate just short of 8%. And yields are lower, not higher. 2s right now, 146, 10s, 173. That's the price action. Here's your trading diary. It looks like this. President Biden, 12:25 Eastern Time. Then Secretary Blinken, Brussels, 1:15 this afternoon. Looking ahead to next week. Eurozone GDP coming on Wednesday, CPI data on Thursday, and second to par, an ECB rate decision. From New York City, thank you for choosing Bloomberg TV. This was the Countdown to the Open.
This chip shortage is going to last longer than many people believe, likely straight through this year. And I wonder what that means for prices. Will this get worse before it gets better?
I don't know that it will get worse before it gets better, but there's no reason to believe it's going to get meaningfully better anytime soon. The Commerce Department put that data out yesterday, and what it showed is that there's a real shortage. Demand is 20% higher than it was a couple of years ago. There's a huge mismatch in supply and demand. Prices are high. Prices are higher. So what has to happen is we need to make more chips. Unfortunately, there's no easy solution. The solution is increased domestic manufacturing of chips, which is what we need to do.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
The capital markets can really help the shift to sustainable and decarbonized global economy. What are you noticing in that as ESG is now the buzzword literally everywhere?
It is definitely the topic of conversation in most meetings I have with company CEOs, with investors, with industry groups. It's amazing.
Pepsi's Number Fever campaign in the Philippines has probably gone down in history as one of the biggest marketing disasters in history, mainly because of a human error that led Pepsi to print more winning caps than they planned. The resulting chaos caused riots, civil unrest, and even deaths. Reporting this story took over a year, and it resulted in me flying to Manila in the Philippines to meet unlucky winners and to find out exactly what happened back then in the 1990s. My name is Jeff Maish. I'm a journalist based in Los Angeles. I wrote the story for Bloomberg Businessweek about Pepsi's Number Fever campaign. The Philippines is a really interesting country. It's made up of thousands of islands, and it's also a country that's very heavily influenced by America. American culture is everywhere you look in the Philippines. They're obsessed with Frank Sinatra music, for example. They love all things America, and that extends to their love for soft drinks, Pepsi Cola, Coca-Cola. In the 1990s, it was everywhere. Pepsi and Coca-Cola were embroiled in what is now known as the Cola Wars. It was a fierce battle for market dominance. Number Fever was already a really popular promotion. It had been rolled out in America to great success. And so Pepsi decided to roll it out internationally, particularly in Asia. They thought it was the answer to their problems. They thought it could finally help them beat their biggest competitor.
Look for the winning number in Sari Sari stores every day, also on TV, radio, newspapers. You could be a millionaire.
$1 million pesos, or $68,000, doesn't sound like a lot now, but in 1992, that was a phenomenal amount of money. You've got to remember that in the Philippines at the time, the average monthly income was about $100, so $1 million pesos was wealth beyond anyone's wildest imaginations. Number Fever caught fire in the Philippines. Kids were saving up their pocket money to buy a bottle of Pepsi. Parents were squirreling away all of the bottle caps in bags. You would walk down the street and people were going through trash trying to find discarded bottle caps. It was a national phenomenon. Pepsi boasted that half the population of the Philippines was playing it. Number Fever boosted Pepsi's sales every month from $10 million to $14 million. It had a huge impact on Pepsi's bottom line. Number Fever quickly became number hysteria. Maids were being jailed for stealing their employers' winning bottle caps. There was even some murders over winning bottle caps. People were fighting in the streets over these caps. There were signs that there were going to be problems with Number Fever very early. Pepsi had rolled out the competition in Chile, and a garbled fax had caused some kind of problem with the winning number. They'd announced the wrong one in Chile, causing riots. There were signs that there could be big problems ahead if they didn't keep their eye on the ball. So in 1992, Pepsi decided to extend the campaign in the Philippines, and they announced that the competition would go on for a few more weeks. One night, on the television news, they announced the latest winning number, 349. The problem was, 349 had already been allocated as a non-winning number in earlier campaigns. So there were literally hundreds of thousands of bottle caps with 349 just floating around the Philippines. Hundreds of thousands of people all across the Philippines, thousands of islands, were finding winning bottle caps. 349, 349. Some people had 10 lucky 349 bottle caps. People were dancing in the street, celebrating. They thought their problems were over. They were millionaires. It's still not certain exactly how many winners there were of lucky 349 bottle caps, but we know that Pepsi printed over 600,000 of them. Pepsi realized very early that there was a problem. Hundreds of people started arriving at their bottling plants with their lucky bottle caps. They realized something was seriously wrong. Pepsi tried to solve the problem by offering a small token donation to anyone that brought a lucky bottle cap to their bottling plant. But it wasn't enough. People didn't want just a handful of pesos. People wanted their $1 million peso prize. Within a year, violent protests and riots outside Pepsi factories would leave dozens injured and 5 people dead. At one Pepsi factory in the Philippines, a grenade was thrown through the window. It killed 3 Pepsi employees. Anacita Rosario was a school teacher living near Manila in the Philippines. She was one of the tragic victims of this whole thing. She was walking to a nearby store to buy some rice one day when a Molotov cocktail was thrown at a Pepsi truck in a violent protest. It bounced under the truck and exploded. It killed her and an innocent bystander who was just a child and injured many others. When I was in the Philippines, I tracked down Anacita's daughter, Cindy, and her husband, Raul. It was clear to me that they were still very upset by the whole thing. You know, a family had been ripped apart by this competition. And Raul told me that he'd never remarried. He'd told me that he'd gone to meet Pepsi executives after his wife was killed. And he was angry. He said to them, you know, this wouldn't have happened if it wasn't for you, if it wasn't for number fever. The biggest revelation from my reporting was rumors that Pepsi was somehow involved in bombing their own trucks. I found a newspaper report with a headline that said, "Pepsi goons bomb their own trucks." And when I visited the MBI, the police department in the Philippines, they presented me with documents and interviews with people who claimed that Pepsi had paid them to cause riots and to cause trouble outside their plants in order to destabilize the situation and to frame the owners of the coalitions that were fighting them to try and curry favor. I just thought that was so shocking. And of course, Pepsi denied it, but how bizarre that a company would be accused of bombing their own trucks. The contest had sparked so much anger in the Philippines because it landed at just this really weird time in the Philippines' history. It was during a crazy election that was racked with allegations of fraud. The Philippines was in a kind of love-hate relationship with America. They loved, obviously, the American aid and finances that was pouring into the country, but at the same time, they yearned for independence. They wanted to be their own country. Vicente Del Fierro was a local preacher living in Manila, and he hated the Number Fever campaign. Del Fierro thought Pepsi's Number Fever campaign was just one of the many ways that America was asserting its dominance over a third world country. He hated seeing his fellow countrymen get ripped off, in his eyes, by this huge multinational American company. He wanted justice. Del Fierro rounded up over 800 winners of 349 bottle caps, and he got them all together to sue Pepsi for over $400 million to be divided between those holders of lucky bottle caps. Del Fierro took money from some of the people who could afford it. They paid him 500 pesos to help with legal fees, but for people who couldn't afford the money, he would just represent them pro bono.
The alliance is to build up pressure on Pepsi. And so you see people marching in the streets. So we have mounted our own campaign, even in the U.S.
He flew to America and he hired 2 consumer lawyers here in America to take on Pepsi. He had a meeting at Pepsi's headquarters to try and resolve the problem, but he said he wanted to take it all the way to the highest courts in America. When those cases were heard in America, those courts decided that this was a problem that should be heard in the Philippines, not in America. Back in the Philippines, Del Fierro continued his case in the Filipino courts. At one stage, there were arrest warrants handed out for 9 Pepsi-Cola executives, which he saw as a big victory. We don't know if those arrest warrants were ever upheld,
but it made newspaper headlines across the country. Pepsi did not take kindly to Del Fiero's campaign. They tried everything to shut him down. They sued him for libel.
My father had to attend 3 times a month for a branch 145 and another hearing for the branch 113A, also 3 times a month. Also, there was a time my father was hospital due to heart failure. Still, he had to attend the 2 branch hearing. Otherwise, for not attending, the judge will issue warrant of arrest to my father. My father passed away January 13, 2010. After staying for almost 1 year in the hospital, he died of complications due to heart failure. After the death of my father, I was inspired to do the website. PepsiCo will be remembered for what they did to the consumer in the Philippines and to my father.
When I reached out to Pepsi for comment for this story, they claimed that they didn't have access to anyone who was working at Pepsi that was around in those days. They also said that during COVID-19, they didn't have access to their documents about this, but you know, they were very careful to say that they were sorry for everything that happened, and we do know that Pepsi did try everything to try and make this right. The Pepsi number fever disaster cost the company millions. We know that they paid up to $10 million in those goodwill payments, but the financial effect could be much greater. After the disaster, we know that Pepsi sales dipped. They were overtaken by Coca-Cola again. Pepsi's number fever disaster changed the legacy of that soft drink in the Philippines forever. Some people of a certain age won't touch it. For many people, Pepsi is a taboo word. A lot of the people that I spoke to were still quite traumatized by their experience, by that experience of winning $1 million pesos, losing it, and then returning to their normal life in poverty in Manila.
When the news of the bombing came out, it was a massive story in Germany.
We are following some breaking news coming to us out of Dortmund in Germany.
It was covered by all the media outlets.
3 roadside explosions triggered at the same time last night as a coach left its hotel in the south of Dortmund.
Public figures commented on it.
We should not let them affect our life, whoever it was.
The media echo went far beyond Dortmund.
I think it was front page news in every single big paper around Europe. Everyone thought of like a terrorist attack, and people were scared that throughout the city in Dortmund there was more attacks to be happening.
Unbeknownst to investigators, just after the bomb went off and the players of the team were shell-shocked, the person who had masterminded the attack was actually sitting in the hotel eating steak and sweet potatoes. My name is Thomas Rogers. I'm the journalist who wrote the article, The Get-Rich-Quick Scheme That Nearly Killed a German Soccer Team. Dortmund is a mid-sized city in the western part of Germany in a state called North Rhine-Westphalia. And it's a former industrial city that's kind of fallen on hard times in the last few decades. It was severely bombed in the war, so the center of the city is quite stark. Some of the few high points include its soccer team.
My name is Ike Henning. I'm a reporter with Bloomberg News, and I'm a great fan of Borussia Dortmund. Dortmund fans are super loyal. On all match days, the entire city is in black and yellow. It's like a religion.
I think more than most German cities, soccer does play a very large role in the identity of Dortmund. In October of 2000, the BVB became the first team in the Bundesliga to actually go public. Salaries for soccer players in the Bundesliga have gone up very dramatically. With such high prices, they thought that by going public, they would be able to compete better with big teams like Bayern Munich.
Unfortunately, that didn't go too well. Dortmund bought too many expensive players, high wages, and the club almost went bust in 2005.
The price of their shares, it has sometimes gone up, but mostly gone down since they made that decision. So on April 11th, 2017, the team was staying in a hotel on the outskirts of Dortmund.
Match days are always special in Dortmund. Everyone is looking forward to it. The team always meets in the same hotel ahead of matches.
They stayed in this hotel in order to have a kind of neutral space before games so that they could concentrate, be sort of isolated from distractions, things like that.
Everyone was pretty optimistic. They had a chance to go really far, maybe into the finals. I was in the office and getting ready for match day. I was going to meet with a friend, a fellow Dortmund supporter, in a pub. As always, the fans are very excited about matches.
On that day, they were heading to play in the quarterfinal against AS Monaco at Signal Iduna Stadium, which is in the center of Dortmund. Shortly before 7 p.m., the players of the team boarded their official team bus.
When the bus took off the parking lot of the hotel and turned on the street, there were three detonations, 3 bombs that exploded and hit the bus of Dortmund.
3 explosions occurred close to the Borussia Dortmund team bus. The B team bus had just left the hotel. The explosions destroyed 2 windows in the rear part of the bus.
People screamed, people jumped to the ground.
The fellow Dortmund fan I was supposed to watch the match with, he called me and said, turn on the TV, there was an attack of the Dortmund bus. And I thought he was like, that was impossible.
Some of the players screamed at the driver to keep driving as fast as possible because they were worried that people might storm the bus.
German investigators say the explosive devices used in the attack on the Borussia Dortmund bus contained metal pins, and that one had pierced a seat headrest.
Unbeknownst to the team members, the actual mastermind behind the attack was, as they were disembarking the bus, was actually eating steak and sweet potatoes at the hotel they had just left.